use a fucking bank? How about we'll start there then? My bad. Maybe the profitability, the fundamental nature. Y'all don't want to listen to it. Y'all want to bring up some random example. All right, how about they could use a bank account in the United States? Maybe let's establish our standards here. How about minimum? Can you use a bank account? Maybe that's how we establish our investments. Oh, I'm gonna invest in this company. They don't have a bank account, but how we read their balance sheet, it's Nah, but honestly, like literally, weed is a good thing to trade when you get like the headlines. But I mean, I made a lot early on in the day, but I've never long term. Again, it's not a profitable industry. Now, Redfin has a bank account, but no, they were not. Well, they were profitable at one point. They had like 2 quarters of profitability, and then that was it. Disney, blame Bob Iger, man. All right, Chad, you got 5 minutes here. Well, 5 minutes and 5 minutes 30 seconds. Airbnb on the high again. Lulu, I have that one up there. Intel's on the low, 2.79. They're getting clapped. Boeing is running up too. Remember, that Canada news? I don't know if that was what made it move, but that ever since then, I think it's up like 6% or something, bro. It's crazy. It is crazy. Did good on the reefers, the ETF reefer long ago. Yeah, I mean, even back in the day, I mean, I hit a couple too, and that's why I'm like, I think trading it. We brought up MSOS leading into the election. Again, this is like, bro, how do you sway the young vote? We true. No, so like you got to think about it. It will be something to trade, but like just don't make the mistake of like, oh wow, because again, early on, everyone thought weed was going to be really profitable, and unfortunately, like weed is like corn. I hate to break it to everybody. It's a commodity. It's literally a plant. So I would apply agriculture metrics to a weed company rather than like a growth tech name. You know what I'm saying? So that is the unfortunate reality. But I think coming into this year, we've talked about it a lot here as the election is approaching. So I could definitely see that logic. Like actual, yeah, it's a plant. I think they use fertilizer too, and soil and all that good stuff, water. Corn was mostly illegal in the world. Well, yeah, but we're not talking. We're talking the nature, like biological nature. It's a plant. It's a commodity. So the economics of commodities are different, especially an agriculture commodity. There's going to be limitations, and then you see how, again, the government impact is what you're talking about. You're talking about bans, but then on the other side, there's subsidies. So that's just welcome to the world of growing. All cash business. I mean, if they were allowed to put that money into like yield and all that, they have other ways, but there is some other things. Wheat. Sounds similar. All right, Chad, 2.5 minutes. I'm for Microsoft. Again, big tech right now. The last couple of days, we brought it up on the watch list, though. Your big tech ain't moving the same. Everybody else is moving. Again, equal weights. You're waking up to GM this, Pfizer that. There's a lot of stuff up and down, but for the most part, again, it's like your big tech stocks. They're kind of like calming down after earnings, and everybody else is doing their thing. Running. I think it's coming back to that level. Oh no, we got a little bit more, and then with the ghetto spread, you're making money. So I think you made an additional $300, and then you're down at 150, 170 on the ghetto spread. Yeah, 3 minutes. This is the big data we want. ISM. This is gonna move the bonds, and then Fed Goolsbee. I think he was supposed to be speaking, and then an hour after this, we get Powell. ISM manufacturing, ISM new orders, and prices paid. Yeah, Elf is crazy. Again, Ulta too, man. That was just a blowout earnings. That's what I was saying. I feel like cosmetics might go up. They started the year off good. Looks like they're ending the year off good. It might be great. Oil getting skippy. Again, bro, rate cut odds are going higher. March rate cut odds are creeping. Oil's up by 0.3, 76.2, trying to break out here a little bit. Again, oil's been a trip the last couple days. That move yesterday was gnarly. There's that FIS. Fidelity, Microsoft going lower. XLF doing great. Honestly, banks just went positive here. Regionals are up by 0.5. Russell is the best on the day. Again, that's word to the rotation. Kenvue for cosmetics. Do they have the cosmetics with J&J? I don't know. I don't think. Again, I would say like Cody's not even getting lift off of it. They are now a barely, but I would go like strict cosmetics. Like I don't know if Kenvue would fall under that, even though they may have some of the brands. I don't think they got the same. Bonds are shooting up right now. Manufacturing 46.7, estimate 47.8. Then prices paid. Prices paid went higher. So interesting. Number came in line, which or again a little bit lower, which I think the market is liking. Construction spending that came in a little bit hotter, but then the prices paid metric went up. I don't know why. Again, 49.9 versus 45, and then new orders came up a little bit, and then overall the employment index. Oh, that's why everybody's going up. It's, manufacturing employment is what everybody likes. That one dropped 45.8 versus 46.8, and then the prices are high. It's kind of a catch-22. But again, people, you got to pick now. Which one do you like more? Employment going down or prices going slightly higher? So here's the deal. This is the employment. That's good. It's getting softening labor market. That is what people are liking. This one is bad. The prices are hitting a high. So again, they're coming back to earlier parts in the year. Same respect, but I think you're going to have a catch-22. But if the Bulls want to come out today, there you go. All right, everything just rocketed. Inflation is back. I mean, again, if they want to eat it up, again, just think now, even with Powell. So now you're going to get a little bit of follow through. Give this a couple of minutes, and then your boy Jerome is either going to say nothing and let this slide, or he's going to change it all. Yeah, so employment was good. That came lower. Prices was bad, and then the new orders, that came in a little bit hotter, but nobody cares. Again, I think employment, prices paid are the... Again, I thought prices paid would have been better, but then again, I mean, the one thing that's sticky, employment has not gone down, so people are like, again, July, that was kind of around July, we had a low ISM employment. Again, that was towards your crazy July rally. Regards, lower jobs, higher prices. So think about it. That's why it's kind of interesting. Again, we want a weaker market for the jobs, but now the price, again, it's not like the prices are surging. You know what I'm saying? It's just a higher than expected number. So that's why you got to keep that in mind. How bad is it? I mean, use that context. Damn, that bond play just ripped back down to 1,000 on that now. Literally, those two candles are huge. That means rally for a little bit if people want to, like, again, you got Powell coming up, and then let it kind of digest a little bit. But if it would make sense why people would want to buy up on the employment. And like I'm saying, if anything would stop them, it would be prices, but it doesn't look like they're stopping them. Yeah, wait till Timmy gets involved in this. So now you got Powell, but like I was telling you, your first data set, this is your driver. You got volume. It looks like the traders showed up today. Powell. Timmy. Remember? I'm sorry, they have a test for the event. I'm watching it. They did a test for Powell. That's good, man. I'm glad that they did a test. They already have a test on their channel. So that's good. Maybe Powell won't get protester today. I don't think he'll get interrupted this time. It's at a college, so you never know. But I'm sure I don't know if they let that happen again. I mean, they just want it to happen. That's the only thing I can think of at that point. Ted Goolsbee, there's a lot of inflation progress also from supply shocks. Again, SPY went up a little harder. Bonds are the ones that ripped off. Bonds went up 0.5% off of that. I think bonds are getting a little squeezy, even with me being one shorted there. But again, you had a way bigger reaction on bond land than equity land off of that data. Rate cuts led the way. So let me double check the ZQ, but yeah, they shot up even more. So they were already up, but if anything, honestly, the rate cut odds kind of front ran it. They already knew what was kind of happening. That's again, I was saying it all before that event there. So again, where are we at with March? Yeah, it says I think it has to update here, or you're getting more probabilities lower. But on the futures, this one might be 15 minutes delayed, but the futures are pricing in again the ZQZ8 or the ZQH24. That one went up like 0.05. Might have to play the song. It's Friday, baby. Fed Goolsbee inflation is coming down exactly as we want. Okay, he sounds pretty good there. Biden to remain deeply engaged in efforts to free hostages. Oh, Jake from State Farm, baby. Good morning. I love you, man. God bless you. God bless you when Co Real Estate loves you. I know it. I know Jake gonna tell you to smile, baby. It's a beautiful day. Amen. Fed Goolsbee, the latest inflation data is absolutely what we needed. Inflation coming down exactly as we want. Again, Goolsbee sounds pretty bullish. And again, we've heard him a couple of times already. So he already sounded bullish, but remember, Goolsbee is he is the golden path man. Remember, he said the ultimate, the softest of landings. Good morning, good afternoon, and good evening, all you blissful souls out there. Hope everyone had an amazing and safe, blessed day. Much love to everybody. Don't forget to smile because we live for another day. That's your message from Jake from State Farm. Let's go, baby. Colt. God bless. God bless. Good morning, my friend. Does fundamental support recent VA run? I don't know if you would call it fundamental, but just remember they have had a lot of updates here from, again, the China rumors down to that whole Canada stuff, and then all of those orders in Dubai, the Dubai Air Show a couple of weeks ago. So they've got a couple of just catalysts hit. Remember, they sold off to 185 just not too long ago, and then they now they're coming back up. So I don't know fundamentally, and I don't know if you know the story with Boeing and how it's been, but for the most part, it's kind of like a mix of both. Hard to say if it's pure fundamentals on that one. Yeah, that's what I'm saying. You're saying 30% in 1 month, so a little bit of fundamentals, but also headlines driven and people getting hyped and how it's moved. Redfin coming up. There's a Uber. Goolsbee, there's no evidence we've stalled at 3% inflation. High ticker is gassing. Again, everything, even bonds are about to make a round two. We got 1 hour till Powell, pretty much. Oh, where's the yen? How did the yen pop with that? Yeah, even the yen popped up on the yen popped up on that data. Interesting. So again, that bond correlation too. Think about it. Huge move on the TLT, and then now you have the yen just right alongside it. Yeah, ARK is killing it, and we're making a little bit more there. The ghetto spread still left us some room on the table. latest U.S.-Russia related sanctions target 3 entities and 3 oil tankers. In the years of 2023, the market squeezes on Fridays. It likes a good Friday. We've had some boring Fridays too, but definitely. Hopefully they keep protesters out. Honestly, I mean, last time we were really hyped for Powell. That is what happened, unfortunately. The yen position right before and he got out. Yeah, I mean the yen is a crazy thing, man. Crazy thing to trade. But I mean, again, just keep in mind is I play in the bonds sometimes. So if you think something's gonna move the bonds, I mean, look out for the yen. That's why I just even checking now. Yen TLT look exactly the same for the day. I think they're both up by 0.5. Worked for Boeing back in the day? No way. Got injured because of democratic costs. I mean, dude, Boeing, the culture of that company, of what was revealed over the years, is wicked, to say the least.
Now it looks
bearish. To say the least. Bitcoin barely moving, coin rocketing. So again, the watch list yesterday, we talked about it, and I think people are front running an idea, but we're gonna get confirmation in the next couple of weeks. Literally in the next 2 weeks. All of your questions will be answered in terms of the data, the market, what's going on. All right, bonds are going up, they're squeezing now. That's a big run there. Again, equity's barely moving in comparison. But the thing is, we are going to be getting a lot of names. There's an idea out there, the rotation. People aren't buying the leaders anymore. Again, if you are expecting a shift in the cycle, they're going to go for stocks that will benefit off of the cycle, rather than just buying the best performers. That's why those ghetto rate cut plays are all pretty much moving. Those are exactly what we're talking about. But right now you're buying it with a little bit of risk, because if anything, if that doesn't materialize, it's bad. But if it does, coming into next year, that will be very, very important. But yeah, coin, dude, 131 is insane. And then bonds breaking out before this SPY. That's what happened the first time. So again, bonds are leading the highs here on the day. Let's see. Still a good time to buy Bill. It's at the beginning of the month, it reset, right? Yeah, perfect time. I mean, again, rates are still elevated until they cut the rate. It's not like Bill is going to give you less money. So until Powell actually cuts the rates, Bill is still the same yield, same safety, all of that. So when they cut rates, we're not going to be playing Bill anymore, because you might want to if you still like the rate, but that's when it's going to change a little bit. Bonds there's a big gap between bonds and stocks. That's why. So they got a long way to go, if anything. And like we've been saying, I think the last couple of days are allowing the market, they're moving the same, but it's giving us a little bit of wiggle room. Like bonds got to wiggle a little bit more than stocks to a degree, but then stocks already had weeks and weeks of run on them. Equities are definitely outpacing. So I mean, the bonds they got a lot of room to go any which way. The reaction we had was employment data of the ISM going down, and market taking that favorably, even though prices went up. Again, it is all fitting in. I don't want to tell you the word. It's an offensive word. But that depending on how much crack you've had in the last couple of days, you would call that Goldilocks. Other people would call it stagflation. But until the stagflation materializes, that's what I'm saying. It's like it's lemonade until it turns into piss. Is the best way to look at it. But again, employment, softer employment, market would love to see that, especially ahead of job numbers next week. But then the prices paid metric went up a little bit, but not enough to scare you. And then it's not like economic activity, contracted or expanded in a way that, you know, changed the narrative too much. And then again, we have Powell in about 47 minutes right around the corner. The bond will top. I don't know. I mean, we've talked. It's percentages at a time. You know, we hit 5% and then we topped out there, and then like we said, 5 to 5.25, 5.5. You play the ranges, and it's Powell going up. But now on the way down, we don't know yet. But as of now, the top on the bond yield is 5%, at least on the 10-year. Even though I'm showing you TLT. Commerzbank said to seek wealth fund investor in Asia. Rocket warning sound in Israel. Very surprised equities like it. I mean, it could just be kind of the emotions beginning of the month. I mean, remember what happened yesterday? You had a massive 20. Equities are in their own little world. You know, equities just ran yesterday, and everything did to a degree. There was a pickup, but I mean, you might get a little bit of a craziness there when it's all said and done. I don't know. Hawkish Powell. The problem with a hawkish Powell is that if Powell becomes hawkish today, that will be a shift. If that makes any sense. So you will be like it's kind of, it costs a lot. You know what I'm saying? Like if this was like a turn-based Mafia Wars game, and Powell wanted to use the move hawkishness, it has a lot of cost. It would help the market come down, but then that's it. You kill all of the hype, because then everyone's like, oh well, maybe Powell is like this. So in a weird way, Powell has kind of been if you haven't, I hope you notice it. You know, it's like, this is my opinion, but I do hope you can observe the natural truth in this. That, you know, if you've been watching Powell, he is kind of just, you know, la 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 la. If I don't see it, you know, if I don't talk about it and I don't see it, then that's it. Again, when market goes up, he's like, well, we'll deal with it later. You know, it has to balance out. It's over time. He's not looking at it. He's trying to act like he doesn't see it. You know what I'm saying? I know he sees it, but you know, the way he's communicating, he's like, no, I don't see anything. La 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 la. He does not want to talk about financial conditions. Why? Because the more he talks about it, good or bad, if he addresses it, he lets you know he's paying attention to it, then that means that, you know, it could be used against him pretty much. And that's where he does not want to give off that impression as of late. So like I'm saying, you know, this is my opinion. You don't have to take my word for it, but if you have listened to Powell, I really do feel like this is something that was very observable, because every time we want him to say something, nothing. He punts. He punts. Wait till the data, wait till this, wait till that. And that is what has allowed the market to keep going with their idea, right? Because then they're like, he's going to cut for sure. And then he doesn't say anything, yeah, double down. He's not saying double down. You know, it's like betting all the way until we get to the flop. But essentially, Powell, you know, costs a lot. Powell's been folding a lot of hands and checking, but at the end of the day, you still don't know what cards he has. But then again, everybody at the table is like, I know what he has. Literally everybody is saying, well, Powell, no, he doesn't have anything. So we'll find out. But if he makes a big bet and wants to put a big bet on the table, that could change things. But as of lately, he's been calming down. So we'll see. Good thing we got 43 minutes there. Market's kind of, again, bond rally, rip more. That's the shit. Again, I'm in a bond play right now, and that's why it's like, man, equities, bro, I could only imagine these moves. Like bonds, you're getting one move up, it's chilling out a little bit, but equities are overshooting, undershooting, so you're getting way more fun there if that's what you're into. But you are now below the data on equities, but bonds are still up. And like I said, it kind of makes sense and not, but you know, the Fed futures, they were already pricing in, you know, rate cuts earlier, even before the data. So the bonds are holding up in their own little world. Thought Powell could kick the can for the election cycle? No. Powell's like kicking the can, but he's just tying it to something. He's tying it to the data, you know. So it's like the data is gonna speak for him. I'm assuming. So unless he needs to like bring out the big guns, I don't think he's gonna kick the can. But I'm saying by the election, you will have data that will probably force him to speak, or the data will speak for him. Microsoft dump again. Tech, Google, Meta, they haven't been the hottest here. Airbnb, let's go cyclical. Yalla. Where's Aviva? Ooh, Microsoft looks hideous still though. Low key, Microsoft does look ugly. It's only 1.3. And then Coin is like, I'm going to the moon. Coinbase is funny. Powell has an ETA at 11 a.m. Eastern, so in about 40 minutes. 8 p.m. Coin pop. 8 p.m. Yeah, banks were green early and they stayed green. Banks didn't even react to the data. And then regionals, again, I think the regionals is like, again, that cyclical rotation. People are buying these real estate stocks, again, and financials. They're kind of in their own little world. So we'll see. Where's MPW at 5? Big level for them. Should be at 19. Microsoft. You could probably make a play on Microsoft. I don't know about long term near all-time highs, but I think definitely a play on there if it moved. But the juice lately has been in the other names for the most part. Remember, Unity ran crazy yesterday, so they're carrying up off of that Talk N on the high. CHs like Zaza or Zero Hedge? Yeah, Zero Hedge. Do you remember the biggest easing in financial conditions? Yeah, I'm aware of that one. That's why I'm saying it's just like we brought this up on the watch list yesterday. It's like if you were right here and you thought financial conditions were easing, they did, but they didn't. They were coming back to neutral. But right here, what happened in the last like week and a half, and now more with the bonds too, and then the currencies, you've weakened a lot. The financial conditions are easing now, so that's why we're saying Powell is in a very interesting spot right now. But then again, he's been trying to avoid it, so we'll see what he says. Well, call it manipulate, call it. They're going to do that regardless, right? You know, it's right now. My issue is the revisions. I mean, the point is, we don't know if the data you get today, you don't know if it's based off the reality of 1 month ago. Or 3 months ago. You know, thinking lawyers, like, you know what I'm saying? Just how lawyers can tell the truth while at the same time lying. You know what I'm saying? That's kind of how you would think about it. But regardless, if the data and the movements, I mean, you will get something that will speak to policy in the next 12 months. You know what I'm saying? It's not like it's going to be like these last couple of months where we're kicking the can a lot. But, you know, new year, new policy, new data, election, you're going to get all of that coming in for the most part. So it's like you'll get something to chew on regardless of the revision or not. But unfortunately, I mean, you should already be operating on an inherent delay, or that should be reviewed. Chip down, arm up. Another 0.1 day. I mean, it's so very small. Bonds in yen and dollar, that's the real movers today, honestly. So like, dude, like look at the dollar, look at the other currencies. Dollar stable, but euro, yen, and then the bonds. That's where the action, and then small caps like Russell. That rotation there is hitting it. Snaps on the high. And, again, this is again they're talking equivalent of 4 rate cuts, but it makes sense with this like ghetto rate cut play. We got a ghetto rate cut. Some of you don't like the name, but I kind of like it. U.S. factory activity stays sluggish in November. So 30 more minutes, we'll see the final thing. Well, not only rotation, it's everybody is thinking, they're thinking big, they're thinking cyclical rotation. They're thinking, again, like we talked about, it's one thing to look about rates, but like, hey, if the rate cycle ends, if this happens, that's a new shift. You know what I'm saying? The whole economy, everything, everybody, that is something new. We're getting into a new realm. So that's why it's like people are front running this now, because in the next 2 weeks, if that dot plot data and everything is good and we open up like we did last year, I mean, think about it. You're going to, all these plays that are beaten down 90%, 80% that benefit off of low interest rates, everybody's going for them. Again, that's why ARK is up. That's why Snapchat. I said it yesterday on the watch list because, like, I love Snapchat. We're already green on it. You know what I'm saying? I don't care, but it's like straight up Snapchat. That's a great example of cyclical, because all of a sudden now you have people upgrading them for reasons that were listed 3 weeks ago. Everybody they're talking rotations. They're talking, okay, if the rates calm down and Powell and we get our softest landing of all, they're buying all of the dog shit that is cheap because it will benefit tremendously off of that environment. That's like REITs would fall into that category. Some REITs are more high quality, but then again, think about it. You're watching REITs, financials, regionals in their own world moving with bonds right now, because if they do come up, if we do shift, that was a close one. Now, the real estate guys don't have to worry about rates if the cycle does change, but that is not confirmed. That is our problem right now. We are all basing this off of assumption of the last couple of weeks in the movement of equities as well as some of the data. So that is our problem. That's why I'm saying in the next 2 weeks, bro, all of your questions will be answered without a doubt. Dot plot, CPI, jobs. Maybe we get something that doesn't say much, but the dot plot itself, we did have a little baby shift last time we got that. The Cybertruck, I think, is super dope. I'm excited that I ordered one 17 years ago. That's all, it's crazy. I'll be able to, by the time I have my first child, I'll be able to give it to them. So I ordered it like 17 years ago. I think they said 2024 delivery, but I know the game. So, it's cool though. I think my son will enjoy it, or my daughter, whichever, when I'm ready to have kids, so I think I still got time. Elon's keeping me in mind. I'm with it. Yeah, Microsoft dumping. A lot of you have noticed that all day today. You'll get it when your hairline's fully gone. That's cold, man. I gotta tell you, Fed Goolsbee says if inflation is not on path to 2, even unemployment rate is going up, we would not stop tightening. Oh, what? Where did Goolsbee come from? If inflation is what we have to get down to target, we are going greater on employment side of the Fed's mandate, but employment side is looking excellent and inflation coming down rapidly. So that was bearish by Goolsbee, but then he was bullish on the other 3 statements. Literally, if inflation is not on path to 2, even if unemployment rate goes up, we would not stop tightening. So that's bearish as hell from Goolsbee, but then everything he said afterwards was bullish. So again, 5% bearish, 95% bullish from Mr. Softest Landing of them all.
How rapidly this.
So this isn't pre-written, so this might be new.
system.
But this is Goolsby right now.
It depends on you. They've been described to me, and
I'll turn it up. He's quiet.
Sound like your folks got to. Class A, Class B, Class C type buildings have different prospects, and partly we still got to wait to figure out this work from home question. If we come back in 5 years, is the share of, are they office person days, whatever, if right now people are working from home 2 or 3 days a week on average, is that still going to be true, or is it going to be smaller than that? Those are the things we got to work through for commercial real estate. When Silicon Valley Bank collapsed, it felt like, whoa, this could be the sign of something bigger, and it hasn't turned into something bigger, but it's definitely concerning.
So sort of a last question as our time is almost up. Sort of what risk worries you most about the outlook and sort of the coming year, and what makes you most optimistic? This is also a question for
Okay. Things to be paranoid about. There are international ones that if there were a meltdown in China, there is one mechanical view that says, hey, China's not, the U.S. is mostly domestic driven. Trade isn't that important. China's only one portion of U.S. trade, so in some kind of mechanical way, it can't add up to a recession. I sort of think that's, you're kidding yourself if the second biggest economy in the world had a meltdown. I think there'd be a lot of freak out, and it'd be hard for us to navigate away from a somewhat serious downturn. I guess my nightmare, I try to get enough sleep, so I won't say it's keeping me up at night, but just keep watching the inflation. Thus far we've made great progress on inflation, but if that starts going the wrong way, the Fed mandate, we have made a solemn vow and promise that we're going to do what it takes to get inflation back to target. So if you don't see improvement on housing, and if you see goods inflation start going the wrong way because of overheating, then you know that the Fed is not, we can convince ourselves of what we are, but the Fed's mandate requires, in my opinion, that we get inflation down. So we should be sobered by history, that every previous time you've gotten inflation down a lot, it has required a recession to do so, and sometimes a very serious one. On the optimistic side, I guess it's that look out the window. In 2023, we got the inflation rate down a lot. We continue to work through positive supply developments. We find it's not that team transitory was there, but team supply shock, I think that was a big component of what was happening. And there's still some of that to work through in the economy, and that's that plus the labor market. Those are the best things we got going. Inflation's been the worst thing, but we're making progress, hopefully.
Okay, great. So we are at time. So
We're at time.
Thanks, everybody.
Thank you for your participation. All right.
Tom, we have a little bit of a break.
Time for break. Okay. Time for break. Honestly, he ended it, dude. I hope you guys see it. The bearish and bullishness of Mr. Goolsby. Again, he got 30 more minutes till power. Won't do that. Won't do that. Won't do that anymore. Need water.
And the demand and the output side shifted to the positive. And back to Mike's comment here, the new order level actually contracted less than it has in quite some time, which is very good. We've been looking for new orders to come back in.
Joining us now, Sarah Howe, senior economist over at Wells Fargo. Sarah, a pleasure to have you on the program. We've traditionally seen the economic data, of course, a slowdown, but still tones of resilience on the underside. If you actually look at some of, at least the ISM data that we got today, it's unchanged. It's not as indicative of some sort of dramatic drop or contraction. When do we start seeing more worrisome moves?
Yeah, so I think in the manufacturing side, so that industry has been effectively in a recession for some months now. And so the fact that we're not seeing activity there worsen is encouraging for that side. But at the end of the day, manufacturing is only about 11% of GDP. And so what we're really focused on is what's happening on the services side in terms of whether we do get that broader economic slowdown. And we're still seeing signs of consumer spending there and resilient activity, but we do expect that to slow as we move through the final months of the year and into 2024, just given that consumer spending power is dwindling.
All right, yeah, Goolsby, man. It's interesting. I don't know if it caused too much of a reaction. I know some of you were like, tell him to stop talking. But remember, you've heard Goolsby like 3 times this week, and every single time he has been bullish. I mean, maybe you can appreciate when he talks some bearishness after saying, really, really bullish things. So, if anything, though, that was... He brought up some points about inflation. Maybe Powell echoes that, because again, he did say something different there today. The big standout that I got from Goolsby right there is that he literally, even if unemployment goes up, they will keep raising rates. So remember, they wanted us to focus on jobs, and now everyone's focusing on jobs. If they kind of want to push the marker back to just 2%, we'll see what's up with it. But for the most part, you got Powell in 25 minutes. That will be the main event, and then we'll really see what's up for the rest of the day. But so far, people kind of, I don't know, you could call it positive. I think positive data for the bonds, but like we were talking about, there was good and bad in that data, and sure enough, equities right now are exactly where the data came out. The only thing that's higher is the bond market. So, and then Fed futures are up too. AL is up, Lulu's up right there, 52-week high. A lot of things, Microsoft getting murked all day. High ticker's kind of gassing though. I just saw a huge surge there. Macy's on the high, they're ripping through. Airbnb, and then someone you said, ARK for the long term, no. I mean, the best case scenario is if we could confirm that, yeah, really the data, the dot plot, there is going to be a cut. I mean, you could exercise those options we have, but like, I would not buy ARK. ARK has had its best month ever. You know that, right? So like that move on ARK that we caught, ARK has never moved like that in 1 month. Even though that may sound weird, but it was like their best recovery or inflows. Maybe I'm tripping out on that. But there was a record set for ARK. It's moved up a ton. So that's why it's just like, I don't know about buying into it on this, cyclical idea that late and then trying to ride it out. But you have those options. Maybe if you really want to go and hold it, you can exercise those shares. But me personally, I would never add ARK to my long term. I would pick and choose what ARK has in their portfolio. Yeah, best month ever, 35%. Get ready. Got 23 minutes till Powell. I mean, I like the concept of NVIDIA, but honestly, it sucks that like after earnings, it doesn't move well. So like eventually, you're gonna get I think you'll get it moving like when you least expect it, or once all the drama dies down. I feel like NVIDIA will match up with everything. Other than that, though, that's the only turnoff for it. 6% on Unity. They were a runner yesterday, so they're continuing. WDC, remember Intel's getting murked, but a couple of other chip makers are down, and actually no, they're all down. So it's really pick and choose in chip maker land. They're all down. What the hell? I thought there was at least one up, like Qualcomm's barely up. Vivos, that hype plays moving on the high. Cigna and Humana now. There you go. So remember, you had that news on Friday. There, yeah, Humana and Cigna running up. PSM is up. That's good. Again, Airbnb, Snapchat, anything cyclical you could think of, they're going up. Snapchat's at $14. Powell does speak 2 times today. I noticed that. I think it's the same event. So when you go and click on him on the Fed website, there's a discussion with Powell, fireside chat, and then he's having another thing at Spelman College with, no, that's Lisa Cook. So Lisa Cook will be there, but then Jerome Powell will be too. But the main solely Powell is going to be here in 22 minutes. You got Josh and Powell on your birthday. Stop it. Drew Pauly, happy birthday, baby. Orna. Shout out all the December babies. What's up, man? God bless y'all. Oh, my goodness. Enjoy the birthday, man. Your birthday's a reminder of another year and another year to get the long term, baby. You know what I'm saying? Let it grow with you. Let it grow with you, baby. Your birthday's tomorrow. Oh, happy birthday, man. I won't be here, but happy birthday. Oh, it's your birthday too, Norberto. Let's go, baby. Oh, December 1st. God bless you all. Happy birthday. Let's go, man. Let's go. The 2 J's, Josh and Jerome. And man, I wasn't here in the morning, bro. I was sleeping, dude. I had a crazy ass dream, and then I had to go. I didn't want to go pee, and then I went pee early, and then I moved my phone in the middle. You know, I checked the time when I woke up, bro, and then my phone, I took it with me off the charger, and I was like, all right, and then I fell asleep with my phone in my pocket, and then my alarm didn't go off, and then that was it, bro. That was it. It was all. Then it was light outside, and then it dawned upon me that the markets would be opening. Too much watch list hype. No, that was just. I don't even know what it was, man. It was good, man. It was a good dream. I felt like your boy Arcad or Banseer, the chariot maker. I had a dream, bro. I had a very intense dream. It felt so realistic. I was tripping out, and I was like, oh, this is dope. It's your B-Day. It's not my B-Day, but, listen, if you would like to get me any presents, if you'd like to like the video, you know what I'm saying? I feel you. I feel you. Sleep in airplane mode if it's next to you. I feel you, man. You don't want that radiation. I sleep with my phone far away from me. But then you ever check the time? When you wake up and you don't know if you have time or not? That's how it is for me. I either wake up right on time or 3 hours too early. So then I have to look at my phone and see what time it is. And then I took it with me. Uber Pop, again, Humana's running up there. Again, your cyclicals doing their thing, 21. Now bonds are coming back below the first candle. So that's the only thing that needs to, otherwise, like we said, the data had a couple of pieces to it. Sure enough, equities, barely lower, but now bonds coming down. This is pretty much the PMI was a non-event, or the ISM. If we come into Powell right at the same spot, I mean, there you go. Kind of funny. Where the hell do I find the purchase price on Schwab? I don't know, man. Schwab is trash. You just log in and fucking Thinkorswim, dude. I hate it. Schwab is so bad. I'm sorry, Schwab. And if there's anybody in Schwab listening, man, I don't want to transfer all the accounts, but can y'all work with us? Can y'all just send me a consultant? I'll work with you guys for free. I won't even charge you a dime. Let's figure this shit out, man. Or just import everything from TD over. But it should say cost basis on the Schwab. But it's stupid, man. So it should tell you your cost basis right here. Cost basis will be your thing. But then again, the platform is very, very difficult. Or without the platform, it's very difficult, especially if you're used to the other one. Only for trading, though. Let's see. I don't know. But it's good, though. In a weird way, the thing I like about Schwab, it'll make sure you really trade long-term because you won't want to use it. So you just put in your money, make your trades when you need to. It'll be frustrating, and then you just don't even want to deal with it. So then, long-term will grow. That's the only advantage I see. That's the only, seriously, you think I'm kidding, I'm not. Like, that's the only advantage, is that you just won't look at it as much. You know, it's gonna get you way more passive, way more passive. So it's a blessing and a curse. I would say Robinhood is way better than Schwab in terms of like interaction and UI and use, 100,000%. I think, you know, I still have my concerns with Robinhood as like a underlying company and how they fill orders and all that, but like, oh, hands down, it's 1,000% easier to monitor and see a portfolio on Robinhood than Schwab. So easy to use with slime ball. Interesting dynamic. Alrighty. Humana came down. You just had a rip there. Cigna and Humana. Cigna's holding up a little bit better there. MP Dubs at the high. Real estate still doing good. Again, regionals and banks. I use Schwab, TD Ameritrade, and E-Trade. No, not by choice, but by force. So we've moved to them recently. The watch list in positions, it's on the YouTube channel. So I put the long term on youtube.com/the stock market. It's on the community tab. And then youtube.com/the trading fraternity is your nightly watch list, Monday through Thursday or Friday, depending on the vibe. Yeah, it keeps you moving slow. It really does. Not bad. Zillow's on the high again. I think Redfin was up earlier. Even then, I'm excited. So our Redfin covered calls, those are going to expire. I hope we get a rally and then can sell more covered calls. I think if we do one more set of Redfin covered calls, the play will be free. So remember, we bid by Redfin. Someone's giving me shit for it, but we bought it at such a cheap price in the covered calls. I think if we could get like $300, $400 in profit off a covered call, your play is free in the long term. Literally, you've collected more money than your outlay by in the last year of just holding that. Snap covered calls, I'm waiting. Yeah, I was looking because again, we've already realized, you know, thanks to covered calls, not nominally on one account we had broke even there, but Snapchat, I would wait. I want Snap to go a little crazier because we have a good position. So if Snap, but right now you could sell a covered call above every price, guarantee a gain, and you could collect back like $1,800 on my position, but I think we could do better. So it's like if we could get a little bit higher on there, I think a covered call would really bulletproof that position. I hate to say this, I actually love my Robinhood. Nah, I mean, I think Webull, I would think you're a little bit more brainwashed, but other than that, no, I don't. I mean, Robinhood's, it's a nice platform, honestly. I don't think it's like, it's a nice platform. I love their platform. I could say that hands down. You know, that's all. Like the fee stuff and like, you know, if they operate, I was worried about solvency at one point, but other than that, like, you know, as a platform, it's an ill platform. I love it. I still have the ball shares. I don't know if they went break even yet. Yeah, we're down like $50 on it. Why is there so many puts on Walgreens? What do you mean? Like, people are buying puts on them again because of their financial situation as of late, or really the growth slowing down, having to pay fees and still paying down debt. Uber, I have 2 Ubers up. We're getting a candle here at the top, a little bit of a pop here. I use E-Trade, what you see here, and then Thinkorswim. Thinkorswim, they made me sacrifice my firstborn long term to Schwab. My second-born long term, or I guess my second and third. But still, that was cold of them to do that. I can't believe that. So they took the best platform in the trading game and said we're going to pair it up with the worst brokerage, the worst platform to ever use for everything else. We talked a lot about Argentina. I think Argentina has an opportunity. Right now, we're in the stages of monitoring whether they actually, what Milei does, what problems come about or don't, and, the hiccups in setting up a new system, but they have a lot of opportunity. I took a trade on BOR, down $10 on it. Biotech play had a FDA approval here, I believe, or some data set. The Disney drop. Wait, did Disney announce the dividend? I thought they were hoeing us. I don't think Disney announced the dividend. Disney is staying far away from the dividend, I think. Unfortunately, they played us. Oh, wait, what? I see a Barron's article. After the company said it's reinstating its dividend, having cut the payout amid COVID, Disney gained 1%. They announced a cash dividend of 30 cents a share for the second half of fiscal 23, payable on January 10th to record holders on December 11th. Oh, what? No way. Oh, hell yeah. Yeah, biannually is what they used to do. No, yeah, they didn't. Is that what? Yeah, dude, I was just saying yesterday, they set my expectations really low. I thought they were hoeing us, man. It's 30 cents. I mean, what's that yield on that? 30 cents, is it so 60 cents a year? What, 0.60 divided by 92? That's not even 1%. Yeah, it's stupid. If I'm doing that math right, I don't know. Maybe I could be doing the math wrong because I'm dumb like that sometimes, but I'm pretty sure that's like 0.5%. Yeah. It's not very good. Yeah, what the fuck? They used to pay like 1, I think, 1.2, or like they were a low yielder. But yeah, that's a bit of it. Not bad though. At least you'll get paid a little bit, but that's actually really bad. But not enough to get you to buy the stock. You see what I'm saying? Yep, there's I've been waiting for it. I did buy into it this year. I thought I was wrong on it. I thought we were gonna have to punt till next year, but hey, we got our dividend, 0.5%, 0.06, baby. You know what I'm saying? A little bit more than 0.5%. If it's 30 cents a year, it's even worse. I thought it was 30 cents a quarter, or 30 cents biannual, so 60 cents a year. No, for the second half, I think I think it's 60 cents a year. Well, they could raise it later, or the stock price goes down, and then you get a real yield, but that wouldn't be too good. Just trying to counteract the Elon comment. But listen, I will hold Disney because I think it's a good investment, but I will fully cancel Disney Plus. Elon kind of have a point, bro. Honestly, you don't even have to support Elon, but like, bro, anytime the advertiser boycotts have changed the internet so much since 2016 that I do think it is time that people react. You know what I'm saying? Where it's like the advertisers cancel the companies, but at the same time, it's like you could cancel them too. So again, it's just in a weird way. I like what he said without like, you don't have to be a full-blown Elon supporter, but I like where he's going. You're gonna trigger people. I've already done that many times, so it's okay. I love you, man. It's all love. Like I'm saying, I'm gonna hold my Disney stock, and I like it. I'm here for certain things financially, but at the same time too, I mean, hey, he's onto something. He's onto something. What did he say about Disney? He just said he called out Bob Iger. He was talking about ads and people like blackmailing for ads and trying to withhold money. And then he said, "I'm talking to you, Bob." Well, Bob Iger was in the crowd. You gotta cancel. You gotta cancel. That's crazy. So Disney has a dividend now. I'm still kind of processing that though. Man, that sucks though. We waited a long time. They gave us 0.5%. It's Spelman College, baby. Everyone's getting ready for it. Yo, they said they cut the rates. If you say otherwise, they're gonna hate. Yo, next year, new head of state. But it's expensive on my plate for Thanksgiving. Tell me how we living. Everybody pissed on the surveys, but they winning. I don't know, but the world just feel like we sinning. Oh. Yeah, I was getting into it, bro. I was getting into it. Like, that's a good beat, bro. That's a good beat. I like it. Oh, run that back. How about run back? Bradley Frizzle and the Peach, ladies and gentlemen. 5 minutes until Powell, and you have just been blessed by the Peach. Oh my goodness. Or not. Let's go. Good morning. Oh man, I think that's the energy we need, baby. Are you kidding me? Are you kidding me? Let's go. All right, man. Y'all better be hyped for this. Let's see, bro. Is Powell going to make the shift or not? Let's see what happens, baby. All I see is the Chad and the Chad of the other Chad, bro. It's kind of funny. There you go. Netflix looking weak. No, the Peach looking strong, baby. Walmart selling. Oh, yeah. Walmart is dying right now. Good call out on that. So hold on, you got a couple of big candles on Wally World. That looks like some news. The other there's a Chad for the there's a YouTube channel for where Powell's being played, and they left the chat open. Usually they don't. I don't know if there's gonna be the off fossil finance people. Caps. Hype train nation, baby. Oh man, we already hyped. This is it. This is game time. I don't see anything on Walmart though. Again, nothing even from the morning here. Walmart is dying. Literally out of nowhere. 1.3 is kind of big for them. That one is not small at all. I'm typing right now. I'm not seeing anything. Let me double check one more. I checked like 3 different things so far. That's a big move. Walmart don't really move like that. Check anything else retail related because other retail was going up. Morning Target, Apple, Paramount, early stages. No, not seeing that. Who is it? Check Target. I saw one thing related. Target might move down, but other than that, I don't know. There's a little bit of retail, but Target, like maybe DKS, they kind of look the same, but it's something with Walmart. But I cannot find it, unfortunately. Weight loss drug banned? No, that was Pfizer just had an issue. I don't know if there was a banning of it. Rumor of Walmart buying Humana? No way. No, they were supposed to merge with Cigna, but I don't know. Humana's kind of holding up. Somebody in chat saying, I don't know if that's real. But I don't know. Maybe. I don't. But someone in chat is saying that. Otherwise, I don't see anything on Walmart right here. If they have a that would be crazy. Connection with Cigna and Humana, that would be absolutely mind-blowing. So we'll see. But yeah, there was insiders selling a couple days ago, I think. But yo, why are these beats so hard? Whoever's in charge of this, Spelman College, y'all got they got the dopest pre-Powell beats ever. All right, Chad, so get ready. You got about 1 minute till Powell. Drop your thumbs up on the video. I will chime in here and there with any updates. But again, if you're not familiar, Powell shouldn't say anything. So what we are looking for is for Powell to make a shift. If he addresses financial conditions and is very stern about it, that will be a shift. Otherwise, this may run like everything else. And a lot of people are saying, how is he going to sound comparative to the other Fed speakers? Yeah, bro, Walmart is getting crazy off of that. What I posted was on Oracle 22 minutes ago. Was that Walmart could play a spoiler in Cigna's attempt. So it's a rumor. Oh, there it is. Powell comments are already out. He's not even live. So look at Powell. Risk of increasing too much or too little, becoming more balanced. Inflation declines welcome but must continue. Too soon to speculate when to lower policy. Premature to conclude with overconfidence that increases are over. Signals officials are likely done raising. So again, he's very stern, saying no cut, but we're done raising. Again, pre-written statements. See, watch out. If he's short and sweet, that will be bearish. But if he talks a lot, this thing is going to balance out. So again, pre-written statements, we already got it. Fed interest rates are probably over, but officials are reluctant to say so. So while Timmy article already coming out pumping it, but Powell's statements revolve around, again, saying risks are coming more balanced, but he's saying we're not too soon to speculate. He addressed the overconfidence and then, again, saying we're likely done, though. So it's, again, kind of a punt. No shift, though. Unfortunately, it's kind of 50-50. So we have to see the rest of what he says. Unfortunately, it's setting up for a punt right now. Again, it's his tone and how soon or not, we'll see what that is. Fed has made considerable progress lowering inflation, welcomes recent softening in inflation data. Yeah, bro, it's live on here, but he's not out. Let's see. Yep. So again, we already got pre-written statement. He says we need to see more progress on lowering inflation to 2. Inflation is eased, but core inflation is still too high. That was the problem with PCE yesterday. No, it's live, but he's not speaking. His pre-written comments are coming out. So I think we got that really, really fast. Shout out, they actually let that one hit the wire on the right time before putting out their pre-written article. Fed Powell, wage growth still high, but moderating to more sustainable level. Unemployment up, but still historically low. Job market has cooled, but is still strong. All right, bonds are coming back up. Yeah, I don't know. It seems like it's going to be a punt. Fed labor market very strong. Fed actions have defined inflation fighting credibility. Expect spending and output to slow over next year. All right, market's popping off of that. And all right, here it is.
President of the Federal Reserve Bank of Atlanta, Bostic and its members, Spelman Board of Trustee members, administrators, faculty, friends of the college, individuals from institutions throughout Georgia, and the remarkable community of Spelman, welcome. I am Marinette Holmes, chair of the Department of Economics.
Powell says premature to speculate on easing, says FOMC moving carefully. Fed become prepared to tighten more if it becomes appropriate.
Today marks a historic event.
Kind of looking like a punt, baby.
142-year history. The first visit.
Fed
by
Powell
Federal
says
Reserve
rate is well in the
Board
restricted.
Chairman-
Bro, this is so delayed.
This is a
I bet you they delayed it because of the risk of the protest, because I don't know if it's all pre-written or not, but I'm getting more quotes
Yes.
coming out. That's
This is a
bullshit.
tremendous honor for our institution. Founded in 1881, Spelman has been training women to take leadership roles in all sectors of society. Our very founding was an investment in the potential of Black women and girls to use their education for the good of society. Today, we are very proud of the return on investment. Thousands of graduates represent the institution across this country in all areas, and given the occasion, we are especially proud of the impact Spelman women are having within the economic and financial sectors. Today's fireside chat between Federal Reserve Board Chairman Powell and Spelman's president, Dr. Gale, promises to be an insightful discussion on crucial topics such as the post-COVID economy. Under Chairman Powell's leadership, the Federal Reserve has placed a high value on diversity, recruiting a record number of women and persons of color holding seats on the boards of the Federal Reserve banks, including the bank here in Atlanta. We are delighted to acknowledge the most diverse Board of Governors in the agency's 109-year history, including Spelman alumna Governor Lisa D. Cook. Yes. And let's celebrate her for her achievements, and thanks to her. Thank her. Because the Economics Department currently houses the Lisa D. Cook Scholars, a scholar program designed to address the scarcity of Black women pursuing graduate degrees in economics. And I am now pleased to introduce one of those scholars, Lisa Williams, class of 2025 from Novi, Michigan, a junior economics major
What's
with
the
a minor
mini,
in management
Russell play?
organization, who will introduce today's speaker. And once again, welcome to this historic event at Spelman College.
Feature on the Russell, not the big one.
Good morning, everybody.
M2K, that's it.
Jerome H. Powell first took office as the chair of the Board of Governors
So watch out,
of
I'm
the
not
Federal
making a
Reserve
play on that one
System
yet,
on
but watch out
February
for that
5th,
one.
2018.
RTY is the big
He was
one.
then reappointed to office and sworn in for a second term on May 23rd, 2022. Chair Powell also serves as chairman of the Federal Open Market Committee, the system's principal monetary policymaking body. Chair Powell has served as a member of the Board of Governors since taking office in May 2012. He was later reappointed and sworn in during June 2014 for a term ending January 31st, 2028. Prior to his appointment to the board, Chair Powell was a visiting scholar at the Bipartisan Policy Center in Washington, D.C., where he focused on federal and state fiscal issues.
Watch the yen, too.
From 1997 to 2005, Chair Powell was a partner at the Carlyle Group. He served as an assistant secretary of the U.S. Department of the Treasury under President George H.W. Bush, with responsibility for policy on financial institutions, the Treasury debt market, and other related areas. Prior to joining the Bush administration, Chairman Powell worked as a lawyer and an investment banker in New York City. In addition to service on corporate boards, he has served on the boards of charitable and educational institutions, including the Bentheim Center for Finance at Princeton University and the Nature Conservancy of Washington, D.C. in Maryland. Chairman Powell was born in February 1953 in Washington, D.C. He received a bachelor's in politics from Princeton University in 1975 and earned a law degree from Georgetown University in 1979. Helene D. Gale began serving as the 11th president of Spelman College on July 1st, 2022. President Gale previously served
I
as
bought
both president
3
and CEO of the
M2Ks.
Chicago Community Trust
It sounds
from October
intense.
2017 to June 2022. Under her leadership, the trust adopted a new strategic focus on closing the racial wealth gap in the Chicago region. For almost a decade, President Gale served as both president and CEO of CARE, a leading international humanitarian organization. As a pediatrician and public health physician with expertise in economic development, humanitarian efforts, and health issues, she spent 20 years with the CDC, working primarily on HIV and AIDS. A previous member of the Federal Reserve of Chicago's board, President Gill currently serves on both public company and nonprofit boards, including the Coca-Cola Company, Organon, Palo Alto Networks, the Bill and Melinda Gates Foundation, Brookings Institution, New America, and the One Campaign. She is also an inaugural member of President Biden's Advisory Council on African Diaspora Engagement in the United States of America. President Gale is from Buffalo, New York. She earned a bachelor's in psychology at Barnard College, a doctor of medicine at the University of Pennsylvania, and a master's in public health at Johns Hopkins University. She is a full professor at Spelman College, a recipient of 18 honorary degrees, and also holds faculty appointments at the University of Washington and Emory University. Please join me in warmly welcoming Federal Reserve Board Chairman Jerome Powell to the stage as he offers his remarks, and afterward, we look forward to President Gale joining Chairman Powell for an engaging discussion on navigating pathways to economic mobility.
Thank you for that very kind introduction. Thank you, Dr. Holmes and President Gale, for inviting me here. It's very exciting to be here. And I'm fortunate to have been accompanied from Washington by a very distinguished graduate of Spelman College, class of 1986, and a member of Delta Sigma Theta. My fellow
what's up, man?
Governor Lisa Cook. I'd say there's no greater testament to Spelman's historic legacy than the achievements of outstanding women like Governor Cook.
Love it.
One part of that legacy is Spelman's tradition of promoting education in STEM. Governor Cook's research highlights the key role of such education in preparing individuals to be inventors and innovators who can generate ideas that will add to our body of knowledge, increase productivity, and generate higher living standards over time. Her work is just one example of how Spelman women continue to make historic contributions in science, the arts, technology, medicine, and other fields. I look forward to our conversation, and I thought I might frame it up first by talking about the Federal Reserve's ongoing actions to promote a healthy economy and how those actions relate to questions that students in this audience might be asking about the future. For example, I imagine students are wondering what kind of job market and what kind of economy you'll be entering when you complete your education. To start, Congress assigned the Fed the dual mandate goals of maximum employment and price stability, and both of these goals are essential aspects of a healthy economy. Congress also gave the Fed a precious grant of independence from direct political control to allow us to pursue those goals without consideration of political matters. Other major central banks in democratic societies around the world have similar grants of independence, and this institutional arrangement has a strong track record of producing better policy outcomes for the benefit of the public. So let me go to the two dual mandate goals, and I'll start with maximum employment. I'm glad to say that by many measures, the conditions in the labor market today are very strong. A couple of years ago, if you go back, the pandemic was receding and the economy was reopening. The number of job openings grew to greatly exceed the supply of people who were available to work, leaving there a widespread shortage of workers. Today, labor conditions remain very strong.
Everyone's just eating. He said he's going to say he's not
returning to better balance between demand and
supply. He
supply.
just has to fight against telling you when he's going to cut.
The pace at which the economy is creating new jobs remains strong and has been slowing toward a more sustainable level. That gradual slowing has come in part due to the efforts of the Fed to slow the growth of the economy to help reduce high inflation. After declining sharply during the pandemic, the supply of workers has bounced back as people have come back into the labor force and as immigration has returned to pre-pandemic levels. Partly because of that labor force growth, the unemployment rate has edged up over the second half of the year, although it remains historically low at 3.9%. The increase in labor force participation has been particularly strong among women in the prime working years of ages 25 to 54, which surged to an all-time high earlier this year and which remains high and above pre-pandemic levels. Wage growth remains high, but has been gradually moving toward levels that would be more consistent with 2% inflation over time. So real, which is to say inflation-adjusted wages, wages after inflation, are also growing again as inflation declines. Turning to price stability then, the second part of the mandate, we have a longer run goal of 2% inflation, and after running below 2% for over a decade, inflation increased sharply in 2021 in the United States and in many other countries around the world. High inflation imposes a significant hardship on all households and is especially painful for those least able to meet the higher costs of essentials like food, housing, and transportation. Beginning in early 2022, we reacted forcefully, raising our policy interest rate and decreasing the size of our balance sheet to help slow the economy and bring down inflation. And inflation has now declined to 3% over the 12 months ending in October. But if you factor out energy and food prices, which tend to be volatile, you get what's called core inflation, and we look at that too. That is still on a 12-month basis, 3.5%, well above our 2% objective. However, over the 6 months, now looking at more recent data, the 6 months ending in October, core inflation is actually running at about 2.5%. And while these lower inflation readings of the past few months are welcome, they're highly welcome, that progress is going to need to continue if we are to reach our 2% objective. The high inflation that we got beginning in 21 initially emerged from a collision between very strong demand and pandemic-constrained supply.
This is the same thing.
And the
same exact
normalization
speech.
of supply and demand conditions that we've seen has played a critical role in the disinflation.
I'd say he had a
and
more
inflation so far,
stern, we're not raising.
as has the substantial tightening of monetary policy and overall financial conditions over the past 2 years. The strong actions that we've taken have moved our policy rate up and well into restrictive territory, by which we mean that tight monetary policy is putting downward pressure on economic activity and inflation. Monetary policy is thought to affect economic conditions with a lag, and the full effects of our tightening likely have not yet been felt. The forcefulness of our response to inflation also helped maintain the Fed's hard-won credibility, ensuring that the public's expectations of future inflation remain well anchored. Having come so far and so quickly, the FOMC is moving carefully forward as the risks of under and over tightening are becoming more balanced. As the demand and supply related effects of the pandemic continue to unwind, uncertainty about the outlook for the economy is unusually elevated. Like most forecasters, my colleagues and I anticipate that growth in spending and output will slow over the next year as the effects of the pandemic and the reopening fade, and as restrictive monetary policy weighs on aggregate demand. The FOMC is strongly committed to bringing inflation down to 2% over time and to keeping policy restrictive until we are confident that inflation is on a path to that objective. It would be premature to conclude with confidence that we have achieved a sufficiently restrictive stance, or to speculate on when policy might ease.
This was the bearish part.
We are prepared to tighten policy further if it becomes appropriate to do so. So we're making decisions meeting by meeting based on the totality.
There is going to be a Q&A,
and
so
their
keep that in
implications for
mind.
the outlook for economic
This is all pre-written.
inflation, as well as the balance of risks. And that's an overview of what my colleagues and I at the Fed are working to accomplish. The bottom line, if you're a student, is that we've made considerable progress in reducing high inflation while maintaining a strong labor market, with a lot of opportunity for new graduates. The unemployment rate has moved up a bit, but it's still very low by historical standards, and by many measures, it's a great time to start your career. You'll face challenging decisions soon about what professions to enter and what companies and other institutions to work for. Of course, some of you will become entrepreneurs, but each of you has already made one really good decision, and that's coming here to Spelman. Whatever opportunities and challenges emerge, education will continue to be a key to success. Higher education is an investment and not just of money. You're investing your time and great effort to gain knowledge and skills that are preparing you for successful careers. Your success will make for a stronger economy. For our part at the Fed, we're doing our best to foster an economy that gives you the best opportunity to succeed. And with that, I will hand it back to you, President Gale. Thank you.
Come on, get some Q&A. All right, Russell is rocking it up almost 1%. bonds
thank you
are
so
still
much,
holding
and
a little
particularly
bit.
Thank you for
But
that
again,
word of encouragement
general
to our
idea,
students
people are
sometimes,
liking no more rate hikes. He's confirmed that, but it's the same
it's
exact
been a
speech.
turbulent economy. It may seem a little daunting, but as we say at Spelman, we are undaunted. So, and I also want to thank Lisa Cook for all that you did to make this visit happen, but also for all that you do to represent this school so well. So thank you so much. And to your colleague and our friend, Raphael Bostic, who is the president of the Atlanta Fed, it is an honor to have you here with us. And our colleague from Georgia
Start
Tech,
asking questions, bitch.
Husband's Feeling. Thank you so much. She's been our co-collaborator in building this. So let me just start. And before I dive in, maybe just start with a few comments about you, or questions about you.
No.
What the fuck? What the fuck are you doing? Bitch, nobody cares.
Okay, I'm a doctor. I know how you really got here. But you're not an economist. You are trained as a lawyer, did investment banking, did some other stints in the public sector. What was your journey?
Bitch, nobody's
would the young person, like the young people who are sitting out here today, be surprised at where your path took you?
So my path was, I'll start with when I graduated from college, and I grew up in Washington, D.C., and the whole Washington, D.C. political scene is there, but my parents and my family were not part of that. We were just people who lived in Washington. My dad was a lawyer. But when I graduated from college, I didn't have a plan. I hadn't thought it through, but I did have one thought, and that was that I wanted to be somebody who had a private sector career, but who also came in and did public service from time to time. And I was thinking of people like Cyrus Vance or George Shultz, who had, important private sector careers, but every 8, 10, 12 years they would come in and serve in the government for a while. That's a unique feature of the U.S. system. You don't really see that that people can have both of those. And oddly enough, that's kind of what happened. So I wound up going to law school. It wasn't that I was dying to be a lawyer, but that was an obvious thing. My dad was a lawyer. I practiced law for just a few years, and then I moved into investment banking because we were working with serving investment bankers, and I could see they were having more fun than we were. So I moved into investment banking, and I really enjoyed that. It was mergers. It's a very exciting thing to do. Did that for quite a while. After doing that for a while, I had an opportunity to do public service, and I did move to Washington and serve in the Treasury Department as an assistant and undersecretary under President Bush Sr. Then I moved, so I did that. Then I went back into the financial business and was a partner at a big private equity firm for a while. And now here I am back in public service. So what would you take out of that? One, it is a real... it's such an honor to do public service, and if you have a mainly private sector career and you want to give back through public service, you can do it in this country. And I think I would think this, but I think it's important that people in government positions, at least some of them, have had the experience of being in the private sector. At the same time,
yes, exactly.
I think being in the private sector, I think, is informed by also having worked in the public sector. So those are some things. So that's how it all happened.
News on China, Evergrande negotiating a restructuring deal, 11th hour.
But I was willing to change careers.
Thank you for losing me money, bitch.
Pay the price. Pay the price of having to learn a new field. I had to do that over and over.
Okay, stocks coming down, but bonds are still holding the game.
So curiosity is probably another one of the things that spurred you on, which is one of the things we talk to students about all the time. Now, as a leader, you get a lot of high marks. This year's word of the year in Merriam-Webster was authentic. And people often talk about you as being an authentic leader. Could you talk a bit about how you see your leadership style? And authenticity is a tough thing to pull off when every word that you say people hang on to. So how do you play the role of an authentic leader with such a very, very difficult, challenging job?
So the Fed, I stepped into a role the Fed does so many things well and right, and the people I succeed are such heroes, really, and so successful and so good at what they did. So, but I think when I think of myself in that way, I'm kind of a more informal, I'm a relatively informal person, and I really do think of getting to good decisions. Part of it is just having a lot of really smart people around you, like President Bostic, like Governor Cook, hearing what they think, and hearing a bunch of different views, and a little bit crowdsourcing thinking about issues, and then coming to a decision after that. That's a very comfortable decision. So, but that requires you to really hear what people are saying and understand their arguments. So that comes naturally to me. I also I felt that it was important that we substantially increase our outreach to Congress, which has oversight. In our system of government, it's Congress that has oversight over the Fed. And so my colleagues and I spend much more time than we used to going up to the Hill and talking to them and listening to them more. And I think that really pays off. They understand that we're a non-political agency, doesn't use talking points. We're just trying to do our jobs and stick to our jobs. And I think even if they don't agree with what you're doing, and even if it's very difficult times, they know that you're doing your very best and they trust you to do that.
So on that, one of the things I think you have done well, and I would argue your predecessor was good at this as well, is trying to decode the Fed a bit. You know, it is for many still a mystery, and you started talking about the dual mandate and what really is the Fed's responsibility. But you don't have a lot of tools. You have a limited set of tools, if you will, to have an impact on that. But people think that the Fed can do all things.
All right, I closed my bond short.
Could you
Took a
talk bit
1.4K
about
loss
where
on that one. That was from earlier this week.
responsibilities and what
Still
you
did
were
good though
able
on the
to
other
do
bond plays,
and
but I'm out. No
where
more.
others need
I don't want to be
to
on the short bond side
take
now. If you get
the
another
next
leg,
step and move things
still holding
forward,
the
and
Russell.
particularly this interface between monetary policy and fiscal policy and how that works in the real world.
Let me start by saying the things that we actually do. So the thing that I talked about was monetary policy. So we use our tools to foster maximum employment and price stability, two equal goals in the law. And that involves raising interest rates and using our balance sheet to either slow gradually or speed up the economy to move the economy toward those goals.
Dude, what's going
we also,
on,
though,
bro?
regulate and supervise banks. We have a broad responsibility to support financial stability to the entire financial system, which we do really through our liquidity tools. That was the original purpose of central banks, was to be there with liquidity, with cash when bank runs emerge. And if there's a facility there that exists, then the bank run doesn't happen in the first place because people know they'll get their money. We also play an important role in the payment system. So we have pretty broad roles.
No, I went long on the Russell
People do
right
expect
here.
things of us that we
So that
don't
place
really
actually
do,
is a
and
great
it's
place for
really
now.
important
We just played it smaller.
Respect the line. Most things in our system of government are and should be assigned to the elected branch. Nobody elected us to do things. We're appointed to do specific, narrow, really important things and stick to those things. It's the elected branch of people. They've stood for election. The president has, the Senate has, the Congress has, and it's very important to not walk onto their turf, because those things are consigned to the democratically elected branches. Very few things are assigned to an institution like the Fed that has the protections I mentioned. We serve long terms. We can't be fired except for malfeasance. And Congress would have to pass a law to reverse one of our decisions. No one can do it. So we have to respect that independence by sticking to the jobs that we have, even though it's very frequent. When I testify, which I do a lot, we had a senator speak to us at dinner the other night, and he pointed out that whenever they have me or a Fed chair in the chair testifying, they always try to get us to support their fiscal policy.
Nice.
Raising taxes, cutting spending, all those things. And we just can't do that. We have to stick to what we do and stay out of politics, and that's what keeps that independence. And it's what enables us to be that rare thing in Washington, which is a non-political agency that is respected by both sides, where they'll give us the room, they'll criticize us publicly, but they'll give us the room to do our jobs and our jobs are really critical for every American.
Yeah, and that nonpartisan and people believing in that is so important. You know, there are things that you can do specifically as the Fed, and you talked about them, things that you can't do. But one of the other things that you have as the chairman of the Federal Reserve is the bully pulpit. Could you talk about how is that useful, and what are some of the kinds of things that you
I need
use
an
the bully
NQ long
pulpit
for a flip. I'm gonna probably tell it in a second.
That's a very challenging subject because, of course, you know, I have many opinions that stray far beyond our, and all of us do, far beyond our narrow mandate. So the occasions for addressing topics that are not precisely our mandate have to be very few and very selective. So Fed chairs have traditionally been willing to say about fiscal policy, for example, that the U.S. budget, federal budget, is on an unsustainable path, meaning that the debt is growing substantially faster than the economy, which in the long run is by definition unsustainable in the long run. But we don't.
KS
we
is
don't
the
get
Russell.
into calling Congress
Or
out,
MK.
or you know, telling them how to balance the, you know, how to bring down
Or
the deficit.
RTY.
We don't do that. And I stay out of that because, you know, we're not fully achieving one of our major goals right now, which is the inflation goal. So, and Congress has oversight over us, not vice versa. But there are occasions when you have to say something. So, and you know, we were one of many public and private organizations that had to speak up about the George Floyd incident in that very extraordinary.
Is this office hours or
history.
something?
And we did, and I wouldn't take that back. But we don't want to be commenting on political issues, except in the rarest of circumstances like that one.
We talked a little bit about this intersection between fiscal and monetary policy. I think COVID is a good example of how both the Fed as well as the administration and Congress really put extraordinary measures in place to be able to, as best as possible, control what was a very challenging economic situation. What have you learned from that? What were some of the best practices? What are some of the lessons learned from what was an extraordinary time?
It's tempted to start by saying that, you know, we'll need some more years of perspective to really look back and have a better answer. But I'll give you a sort of a, in the middle of things, tentative answer. So, I mean, I'd start with the fact that the U.S. economy has really been the star performer in the world since COVID. And so, you know, we've had a higher growth, we've had a stronger labor market, we actually have had inflation coming down now faster than
The headline hitting says Powell says fiscal policy unsustainable. He said that like 30 seconds ago.
Basically,
I think you're just moving around.
We've done well.
You're getting, again, the whole
Get the
idea
way.
here.
Back.
He's not saying anything
The
new. He's
economy
punting
got
again
stronger
while
much faster,
saying
I
he's
think,
done
than
raising
we
rates
expected,
once
than
again.
most people expected.
There's
If you
nothing
think
new,
about,
more or less.
You know, if you go back to the time of COVID when it was actually hitting in the first half of 2020, you're looking at a situation where the economy around the world is closing, where we don't have any idea how long it'll take to get vaccines, where we don't know how we will reopen the economy. If you can't get vaccines, we didn't know how lethal the disease was going to be. So there were real possibilities that you could be in a longer term situation where you just couldn't get the economy back up to full speed. We just didn't know. And so Congress acted, I mean, with no dissents. Imagine that, no dissents passed the CARES Act, which literally put trillions of dollars of potential lending power in our hands. It was so big that we didn't have to use it. The financial markets were kind of closed, and they reopened without our having to use this authority. So we made very few loans in the end. It was amazing. But so if you look back on that, I mean, what you know now that you didn't know then was that the economy really did recover much more quickly and much more forcefully than we thought. And of course, you would have acted a little bit differently, knowing that. But overall, you know, we'll have to judge this with some.
Are you ready for the fun fact?
Back over time.
It
Remember
is
how
now Euro close.
extraordinarily unusual, unique the circumstances were. We hadn't had a pandemic in 100 years. No one knew what to do. At the very beginning, there was a question: well, why is the Fed even focusing on this? And then, you know, if you remember, there was a very small stimulus bill that couldn't pass before then. And then 2 weeks later, the CARES Act was passing with all this. So it was a moment of great uncertainty and learning.
And so we're still probably in a moment of a fair amount of uncertainty, partly because the economy isn't acting as might have been expected. So
Oh, bitch.
sitting now,
Not me.
thinking forward, to the extent that anyone can prognosticate, what are some of the lessons because of what we went through in COVID that might help us think about where we need to go, even though things are a bit unpredictable still?
The economy has repeatedly surprised us and all other forecasters. It's so if you go back a year, not many people, and I'm not aware of any people who forecasted that we would have quite the level of strong growth that we have had in 2023, around 2.5%. A labor market that's still been creating millions of jobs, and yet inflation beginning in June coming down, very meaningfully. So coming down significantly. So, and those are all good things. All three of those things are good things. So we've been surprised on the upside this year. In 2022, when we were raising rates very rapidly, it didn't seem like we were getting any payback from that, but we really did get a lot of payback this year, and we also got the unwinding of those pandemic effects that I talked about. So that's the, people dropped out of the labor force, and they didn't come back in 22, and then they did come back in 23, and also immigration picked up. So all that's happening. So looking ahead, once again, we're still in a place where there is no, there isn't any experience with year 3 of the pandemic recovery, the last time we had a pandemic. It's just unique. But so if you just take on board what I said about where the economy is and where policy is at a restrictive level, meaning it's holding the economy back. Inflation is still running well above target, but it's moving in the right direction. So we think the right thing to be doing now is to be moving carefully, thinking carefully about how things are going on, letting the data tell us what the story is. The data will tell us whether we've done enough, whether we need to do more, and
Positive.
That's what we're doing. We're moving. I would characterize it as moving carefully.
Yeah, and kind of taking it based on circumstances by circumstance.
Let the data, reveal the appropriate path.
Let the
We
court
don't
show.
need to rush now, having moved, quickly and forcefully. We're getting
Again, you're hitting that top and then coming back down there. Nasdaq's still negative. It's right at break even, but
to move
you're
carefully.
dancing. Even bonds kind of coming
So,
down.
probably my last COVID-related question, but clearly one of the hallmarks of the COVID economy was how globally interdependent we are. Could you talk a bit about your relationship to the other central banks and how during times like that you work together? What are the ways in which you balance each other, and just a sense of how we, as the United States Central Bank, collaborate with others?
I'm not trying to lose $100 today,
central
bro.
banks meet 6 times a year in Basel, Switzerland. Just the central banks, not the elected
like I
governments,
am.
not the finance ministries. And I didn't. That wasn't part of my world before I was chair. But so we and we don't issue communiques. We just talk about. We go there for 3 days and we just talk about what's going on in economies around the world. And also, they're cross-cutting issues that we deal with, like how's inflation going, and all the things that matter for the economy, what's happening in labor markets, what's happening with monetary policy. So that's enormously informative. And as you pointed out, nothing proves how global the economy is better than the pandemic, right? It was global. During the pandemic, I was in extremely regular, often more than once a day, with other heads of other major central banks by phone. We were the only one. Remember, at the time of the global financial crisis 15 years ago, there was plenty of room to cut interest rates. That was not the case. Our interest rate was really the only one that was far enough above zero that we could meaningfully cut it, which we did. But nonetheless, we were always talking. The major central banks were always talking about what's going on, learning from each other, and that kind of thing. And it's very important, because when there's an international crisis, you need to know the people you're working with. You need to trust them. And by the way, this is very much replicated at the staff levels between the major central banks, because a lot of when there is a crisis, a lot of the knowledge about what to do and how to do it in our very complex financial system and the plumbing of it, that rests with the staff as well as with governors and Reserve Bank presidents. But the staffs know each other well. There's a seamless web around the world of people with all that knowledge, which in a crisis, to see them come to work and do what they do is truly amazing.
Crisis together. The system of central banks is working even closer together than before.
I think we don't have the ability to, we don't do,
Sure.
we don't collaborate on, we each serve a domestic mandate, right?
Right.
Our mandate is to work for the people of the United States. But yes, I think there's a world where we really understand each other and know what we're doing. The dollar is the world's reserve currency, and there are dollar funding markets around the world that are very important for our economy. So we support the dollar as a reserve currency by we have 5 standing swap lines, and we actually opened up 9 additional ones with central banks around the world to support the role of the dollar. It's enormously important in relieving financial stress, and both in the global financial crisis and during the pandemic. So we're very mindful of international economic flows, and it's a critical part and a much bigger part of the chair's job than I would have thought watching from the seat of a governor.
Lift at 12.
Let me talk about an issue that is near and dear to my heart, and I think is also a big concern for many people here in Atlanta, and that's wealth inequality, and particularly the racial wealth gap, which in Atlanta is, I think we're ranked number 4, 2, 3, or 4. I don't know, Raphael, where we ranked number. We're up there in terms of wealth inequality here in the Atlanta region. Obviously, there are some things that the Fed can do to impact that, but also there are also things the Fed cannot do. I know it's something you have talked a lot about. Your predecessor, Janet Yellen, also talked about that. Could you speak to wealth inequality, thoughts that you have about the ways that the Fed can and cannot be helpful? And I say that also thinking about some of the critique that people have around bank regulations and how that may or may not play into the ability for low-income populations to get access to credit and important things like mortgages and credit for starting businesses. So, bottom line, wealth inequality. What can the Fed do? What can the Fed not do? And are there more things that you'd like to see happen to make that less of an issue here in this country?
So one of the things that we
all
do
the big
just
tech is still down.
Really part of
CRM's moving up.
to do all of our jobs is we're careful students and we hope deep, thoughtful students of what's going on in our economy and in other economies. But one of the things that's been going on in our economy for close to a half century now is this rising inequality. And so the first thing that we do is we collect and publish a tremendous amount of data on this with the national accounts that we do, with the survey of consumer finance and many other areas. If you go to our website, there's an awful lot of data that we collect and put out about disparities in income and just income levels and by all different kinds of categorizations. So we're a source of data, a big source of data.
Banks now too, they're continuing.
Second thing I'll say is the thing that we can really
Even
do,
with the bonds
two
stalling
things that
out
we
too,
can
the
really
bonds
do
look like
in
SPY.
policy.
And then NASDAQ's still red, Netflix flushing. NASDAQ's actually at break even right now.
So we have powers to enforce fair housing laws. Not all those powers, they're shared around the bank regulators, but that's an important one. The second one really is, and maybe the single most important thing we can do, is if you look back at the very long expansion that ended with the pandemic, longest expansion in recorded U.S. history, 10 years and 8 months. What started happening in the last 3 years was most of the gains were going to people at the lower end of the income spectrum. The gap between black unemployment and white unemployment was at historic lows. And there was by the way, the economy was not overheating or anything like that. We're looking at this and thinking, this is so good for the United States, so good for America. And it can go on. It can keep going. And very beneficial. So the thing we can do is use our tools to get back to.
All right, I sold the NQ, got like 360, still in the Russell, but this should be the breakout, but just in case.
You had companies.
I'm leaving
we
you a
heard
little bit
stories
room,
like this.
Chad.
Companies were going into prisons and finding people who were not going to get out for a year or so, and meeting them.
Pump it up is on the way, baby. Pump it up is on the way if this keeps going.
Because there just weren't enough workers. So very beneficial, positive things like that were happening. You asked about, the other thing is, we don't really have, it's the elected branches of government that really have the tools that can address these questions of inequality, and that's around education and all the things, tax policy, all those things are really not in our hands. But the tools that we have, we will use. I don't think of bank regulation as being, the point of bank regulation is to have banks be safe and sound.
I'm going with Russell instead of NASDAQ, RTY.
We saw this in the
I'm already up 1% on the micros. I went with a bigger one here. We'll see.
Really
It's like a
damaging
third
to
of the
growth.
size, though, of the other one.
Very high unemployment.
So it should be chill, but it's definitely a
That's
top tick.
Very painfully slow.
But again, the Russell has held a lot better.
Because when the financial system is damaged the way it was, the economy was just going to grow. It grew very slowly for 10 years. It did grow for 10 years, which was great, but we never saw that 3, 4, 5% growth year that we wanted to see.
There you go. SPY's breaking out now, too.
You mentioned earlier
Hello.
the employment mandate, and that obviously feeds into issues of income inequality and to a certain extent wealth inequality. And the Fed has recently gone from saying just maximum employment to also inclusive employment. Could you talk about that and what that means to you and how you think the Fed can play a role in inclusive employment?
So, really, the goal is maximum.
Bond's still going. Again, financials, I had that, and even
Insight
take a
that
look
we
at art.
had, and part of it just was what we saw during that long expansion, is that to be maximum, it really needs to be inclusive. Meaning, you need to be looking. Ultimately,
All right, I took $70 on the RTY. I'm going to go in on it again if we get one of those stupid candles.
But
And I'm still holding the minis. The minis are up 1%, which is nice.
By racial and gender and income and all of those things, immigrants, native born. We look at that data, and all of that informs our assessment of whether we're really at maximum employment. So we said that maximum employment is a broad and inclusive goal, and that's part of our framework now.
Great. And I think important words matter, and I think having that word inclusive in there does make a difference. I'm going to start opening it up to questions in about 2 questions. So
we're getting some audience questions.
We are giving preference to students, so we'd like students to stand up first.
Well, I'm a student. My name's Nick Timmerhouse. I'm a freshman. Powell, are you done raising rates? Because everything sounds really
I've
bullish.
got lots of questions that I could keep going on.
Well, I'm
and
a
answer, but
freshman.
let
My
me ask
name's
you,
Nick. Or my name's Mick.
This is part of a
Mick
This
Mimmerhouse.
visit is part
That's
of
my
some
name.
of the learning tours that
No,
you
I
do
want to be a
throughout the
reporter when I graduate.
And you have thought that it was important for you to get out
My
and
name's
actually
Mickey
talk
T.
to people about how they experience
You can call me
the
Mick.
economy.
Just call me
Could
Mick.
you give 1 or 2 things that maybe surprised you or that were important insights as a result of actually getting out and talking to people?
So it works 2 ways. Of course, we have an obligation to go out and we want to explain what we're doing, and that's just part of our job. We want the public to understand what we're doing and why. That's part of it. The other part of it is, we get incredible amounts of data, right? Aggregate data, and you can only stare at it so long. I think all
I
my
can. I can
colleagues
do 7
find, too,
hours a day, sir.
When you talk to
Every
people
day.
about their
Make sure you
lives
guys are
and the
subscribed. Like the
economy,
video. Amen.
it starts to form into a story and into a more a better understanding of the details of the lives that people are
I bought a Russell and I sold out of it real quick
I mean,
because I didn't. It was a bigger one, so I'm still holding the small one. I got out of the NQ. I got out of RTY, so I was waiting for one of these pullbacks to reposition here.
Mississippi Delta,
But I'm still gonna hold the baby one.
Mississippi Valley State.
We bottom ticked that on the Russell. I'm telling you, Russell should be the winner. Everybody's taking this bullish. There's gonna be a bearish hiccup at one point today, so don't get too confident. That's why I'm keeping the small ones and freeing up. I closed my my bond short. I took a loss on that. So, you know, a little bit of the fighting the bullishness here, but, you know, same speech is coming through.
I was in another one. I was in York, Pennsylvania, which is a small manufacturing town. And if you think about smaller manufacturing cities in the United States, my muscle memory would be that they must have really suffered because so much of our manufacturing base went overseas with China coming online and other countries as well. And interesting thing about York was that what I learned was they actually had a strategy to combat that, and it kind of worked. I mean, they brought resources together around some manufacturing and some other business things, and it worked. York is a healthy, thriving city, and there are many other examples of cities that have just lost their manufacturing base and they've just kind of collapsed fiscally. But I think it was interesting to see that if you have a plan, it can actually work. And I'll go home and I'll think about this trip, and I'll no doubt I'll learn some great things.
Great. Well, we hope you will. One last question before I open up. So what does fun look like for the chair of the Federal Reserve Board? Like, you can't go to a cocktail party and say much. How do you have fun?
For me, a big party, and I mean this is really
music,
as fun as it gets. It's like a really good inflation report.
Yo, that's the most bullish statement ever. Wait a minute.
Okay.
No,
First
dude,
question.
what? He's saying if we get a good inflation report.
To speak with us today, my name is Catherine Stewart. I'm a graduating senior at Spelman College, majoring in economics. Originally
Powell's
from the South
insane,
Bronx area of
dude.
New York City.
He's happy.
So the Fed aims to have 2%
You said that's what he does
inflation
for fun, a
rate
good
and to
inflation
maximize
report.
employment and price stability. And as you mentioned earlier, the inflation rate is currently at 3%, so not necessarily where the Fed would like it to be. As we know from the principles of macroeconomics, over the long run in the business cycle, inflation decreases during recessions and increases during expansion. So my question for you is, how will the Federal Reserve address the volatility of inflation while avoiding a potential recession in the economy? I know you mentioned earlier that one way would be raising interest rates, but can you think of another way that could address this dilemma?
Yeah.
Great question. Thank you. So, if you look at the history of campaigns to bring down high inflation, what you will see is, in most instances, not all, but in most instances, that has wound up. We know that higher interest rates, of course, will slow the economy, and that's the tool we have to bring down inflation. In many instances, that has resulted in significant job loss necessary to restore price stability. We haven't seen that here, and we've always felt, my colleagues have always felt that we had a chance, that there's a path to getting inflation back down to 2% without that kind of large job loss. And I still believe that. I've always believed that, and we're on that path. But some softening in the economy has happened. You've seen growth slowing back to a more sustainable level, and we hope we can stay on that path. We have to restore price stability, because price stability is really the bedrock of the economy. And everyone, once prices are really stable, inflation is stable around 2%, people can stop thinking about inflation. They can focus on everything else. When inflation is volatile and high, not many are old enough to remember what that was like, but it's really bad for businesses and households trying to plan. In terms of other tools, I wish we had them, but the fiscal authorities have their tools, we have our tools, and our tools are interest rates and our balance sheet, which affects interest rates as well.
Next, Mike.
Thank you for that. Can you all hear me?
Yes.
Sounds good. Good morning, Dr. Gale and Chairman Powell. This has been such a didactic conversation, so thank you for all that you shared. We spoke a little bit
New
about
high on the SPY now,
optimal
and NASDAQ to
employment
0.19.
and maximizing it and ensuring
Russell
that
is
it's
the leader.
inclusive. And so earlier when you were speaking, you spoke about your background, Chairman Powell, in private equity and investment banking, and even alluded to entrepreneurship. And so my question for you is, during these contractionary phases of the economy, or where there's threats around contractionary phases
I don't know what
economy,
didactic means.
how can
Stop playing with
minority
me. I don't know.
entrepreneurs ensure that their
She got me
ventures
on that
are
one.
backed and armored to ensure that they're so stable during contractionary phases and when those policies are in use?
So how can minority entrepreneurs ensure that their ventures are supported? And so first of all, let me say entrepreneurship and innovation
I have
are
to Google
kind
that
of the
one.
secret or not so secret rocket fuel of the economy. It's entrepreneurs,
Didactic.
both business and social entrepreneurs, who look at the world and see something missing.
Just look up the
that
word
Russ, we should have held the
didactic.
other Russ.
Create it there.
That one's
And
running
I know-
now.
I-
Everything, man. It's gonna be one of the. It's gonna eventually hit a point, and then we're gonna
Those are the ones who-
we're gonna do the dancing queen at the top. But again, this is the same speech punting, but if
And they
anything, it has a
patronizing
bullish
way?
tilt by confirming no rate cuts. Again, you should have realized this by not too long ago, but
So
we're riding up until the
huge.
market
That's
wants to
what-
chill.
That's how things happen in our economy. Someone says, "Hey, we don't have an X. Let's create this." So, in terms of how to make it through hard times, I mean, it's right.
Very
now, of course,
educational. She could have just said that.
You're
Right
very
before
close
the
to pumping
pandemic,
it up.
There was a whole lot of money for entrepreneurs.
You got 14 more points.
It was a time.
This is one of the higher
And
levels
that has
too.
dried up a bit. Venture valuations have come down, but just know that it's a
Ah,
cycle.
fuck! I sold to
And
her.
many ventures have.
So this is
have
the high of the week. You're
promising
above the first
to
level now. I'd say at
become
45.90. Next level is
incredibly
4,600,
successful
Chad.
over time. And
Next
you
level
look
is
back,
4,600.
Talk to any of the great entrepreneurs, they'll say, "I had a time when I came this close to just wrapping it up and going to law school." Nothing wrong with going to law school. but they'll say, "I stuck with it, believe in your dream, and keep pushing."
Dr. Gill and Chairman Powell, I want to thank you for hosting this forum for the Atlanta University Center. My question for you is, how do you anticipate the
And
markets?
your name?
My name is Jonah Watts. I'm a sophomore business finance major, econ minor over at Morehouse College. My question for you is, how do you anticipate the markets will respond to the acceleration of artificial intelligence and economical resilience of Americans in the long run? And what provisions has the Fed sought to account for this?
So artificial intelligence.
Yeah,
is something
RTY's
that
ripping,
everybody's
Spies chilling out, bro.
trying
Everyone's
to
hitting on
understand.
that one.
And
180,
we have
holy
experts
shit.
in all the time.
I sold at
and try to understand its
125.
implications for the economy. And there's just
Again, this is one of the levels, 45.90 on the SPX. That's it. You got like 45.96, but then it's 4,600 after this. Let's see though. We kind of topped out at other points, but like I'm saying, you're getting a weird Friday melt up mode. So if you haven't noticed, all of these like it's like it's getting all the top tickers. It's gonna punch you in the face a little bit. So just approach with caution. The musical chairs.
Forever. So what is AI going to be? And I think we have a very healthy discussion going on out there. We actually had a meeting at the Board of Governors in Washington with 6 or 8 of the, very well-known. These were academic economists and experts, and they were split. There are people there who are on the optimistic end side of things, saying, we basically have a labor shortage and the economy wants to grow faster, and AI is going to help us do that, and it's going to lift all boats. And then there are other people who see that it can replace so many tasks that are actually not just that are pretty complicated tasks that you need some education to carry out, but AI can actually do them maybe even better than people. I don't think we know. I think that there's also another side to it, which is the potential systemic ramifications of having AI and the financial markets interacting. And so there's a lot of thinking going on about this. We're in the early stages and a lot of uncertainty. So I'd say it's going to be a while before we really understand how it needs to be regulated and how do we capture the obvious potential productivity increasing benefits of it without experiencing macroeconomic or financial stability costs.
Great. So we'll take the people who are standing now, because we're at risk of going well over time, but would love to
don't
get
worry,
the
we appreciate it.
questions in.
Thank you.
Thank you, Dr. Gale.
No, we
Hello.
love this.
Thank
We
you
need
both for
we
being
need the
here.
Q&A.
I'm Alicia Sawyer, a senior economics major from Atlanta, Georgia, also a Lisa D. Cook Scholar. And my question is really about your background in investment banking and private equity. How has it impacted your decision-making process, both when you initially entered the public sector and where you are now?
So I've enjoyed all
Or
of
the
the
AI in
different
my
parts of life.
amen, Mike.
I really feel like I learned a lot.
You be getting deep on these. They're amazing.
Everything, but so when I was an investment banker, we were providing financial services to largely companies. So I learned to understand the capital markets and also business models. When you're working with a company, you need to understand, why is this company here? What does it do that other companies can't do? How well does it compete? And that kind of thing. So it was a real education in both how financial markets work and how they value things, and also in business strategy. You need to understand the business strategy of a company to give them the service that they need. As a private equity investor, you're actually putting money to work behind these things.
Banks are running against Citi, Wall, XLF. Again, that's a big deal there. It makes sense with the Russell. Russell's hitting a new high too.
Warren Buffett
So again, Russell is not stopping. We should have held that last one.
Business model. Usually, it's the business model that wins.
So again, SPY, NASDAQ doing their little dance, but again, interest rate sensitive is moving off of this.
About management. When I became a private equity investor, I asked.
And rate cut odds are increasing.
Head of our firm, who was a Hall of Fame investor, tell me about how do you spot a good manager? What does a good manager look like? And how does that, what are the characteristics? And he said,
yeah, the NQ would have paid out good. I think I made like what, $300 in a couple minutes, so it wasn't too bad. But I felt like I positioned high.
People can become good managers.
And then I had to we made up a little bit of the bond loss here today, so it was nice. And then obviously this last month of bonds was great.
As long as you have a high level of self-belief and are willing to work really hard, there's a leader in there, there's a manager in there who can do it your way, in your own particular way. I mean, there's some common factors, but it really is remarkable how how many different paths there are to being successful.
After 4,600, it's like 46.
Thank you.
14 and then like 25.
Good
or then
morning.
4609.
Thank you, Dr. Gale, and
the
Chairman
previous
Powell for
high.
speaking with us today. My name is Peyton Thomas. I'm a senior psychology major from Hampton, Virginia. And I know that you spoke to a little bit what the Fed can and cannot do in terms of the racial wealth inequality in America. Do you have any advice for what we as young Black college students can do to help combat that racial wealth inequality?
I will say this, the thing that has always moved me the most in that area is education.
Liar.
So I was the founding chair of an inner city charity in Washington, D.C. I was also active in a similar charity in New York City to help inner city kids get an education. And you find their parents, or often their single parent, are desperate to get them the education they want and keep them away from trouble. And so there's so much to do there. And every kid who gets through 8th, 9th, 10th, 12th grade, and is doing well at it, it's just a person who now has a chance at a middle class life. So I think that, to me, that's the thing. Our education is really hard and really important, but education is the road for people. We have. One form of inequality is mobility, and there's a lot of work by an economist named Raj Chetty, who I know my colleagues know, who really measures mobility. And U.S. actually has lower income mobility than other major democracies, and it correlates heavily with race. So I think there's so much to do there. I mean, my wife and I spent a lot of time and no small amount of money supporting this cause over 25 years, but I think that's a great cause.
Thank you.
Hi, my name is Maya Spencer. I'm a sophomore economics major, management and organization minor from Williamsburg, Virginia. And my question is, what are the Federal Reserve's observations or analyses regarding the current trends in reduced consumer spending, and how does this impact economic indicators and the Fed's monetary policy consideration?
So consumer has been very strong, and it's been surprisingly strong. There was what were called excess savings, so people couldn't spend money on trips and restaurants and bars and things like that because it was COVID and everybody was staying home, so they saved money. And also the government gave checks to people to sort of make them whole and replace their lost income and that kind of thing. So there were people had, particularly people who were income constrained, had much larger piles of savings than they had before the pandemic. And there was always this thought that would get spent down. And so this very strong spending we had in 21 and 22 would what's been amazing is how strong consumer spending has continued to be, and it may well be. You see credit card borrowing going up. You see defaults going up now. So we may be actually getting to the end of that. So to your point about monetary policy, we're of course very, very carefully watching as the economy appears to be slowing this quarter. We think it's quite early in the quarter to be able to say that, but we think the third quarter was very, very strong. GDP, we think it's slowing down based on the limited data that we have, and all forecasters basically are saying that it will be. We're looking to see how much slowing there is. 70% of the U.S. economy roughly is consumer spending, and so that's going to be the big thing. As long as unemployment remains low and employment remains high and wages are moving up above inflation, though, there's no reason why spending wouldn't continue to hold in there.
Thank you.
Hi, I'm Anna Princito. I am a sophomore international studies major from Dallas, Texas. And you touched on public service, and I really enjoy that because I believe that if you have an opportunity to give back, always do so. We are blessed to be at an institution that has a plethora of opportunities, but for those who do not have access to higher education and are just trying to make ends meet, what are the public service policies put in place that the Fed has, and how can we get involved?
With the Fed? So, we hire, for example, if you look at the Atlanta Fed, we hire research assistants right out of college to work. There are some RAs, I think, at the Atlanta Fed. Raphael's nodding, from Spelman. So we're very much poised to take in young people. And I would just tell you to, if you look on our website, reach out to us. We'll be very happy to interact with you. And there are 12 reserve banks around the country, and they're always hiring research assistants. There's also the Board of Governors in Washington. As you get down the road, if you were to do an econ PhD or a law degree, or just a general public policy, want to do public policy, and you've got some experience, we have. In the whole system, we have over 30,000 employees, I want to say. But that's the 12 reserve banks and the board together. We want people who want to do public service. I'll just tell you, it's enormously satisfying to do public service. It's also satisfying to work in the private sector with a company and share that mission. You feel the same way with that in the private sector, but nothing quite like serving the public.
Thank you so much.
Thank you.
Phenomenal questions. So I almost sat back down because they were so impressive. So I was just give a hand to the Spelman students. But Donnie Beamer from the Atlanta Mayor's Office, and I oversee our Office of Technology and Innovation. Larger in how it impacts our experiences and also people's household income than what's reported.
Great question. Let me open that up a little bit for people. So you have the general public, right? And a certain number of those people are either working or looking for work, actively looking for work, as in they've looked within the last month. And those people constitute the labor force. They are participating in the labor force, either by being employed or by actively looking for jobs. But there are many, many people who are not in the labor force. And if you're not in the labor force, then you're not counted as unemployed. So you have to watch, you have to look at all of those things. During the pandemic, many people dropped out of the labor force. I thought that when the vaccines came out and the economy would reopen, that people would come right back, but they didn't. You ask, is there a number that we target? The answer is not really. We have an assessment of, if you look at what drives, the thing that's happening with labor force participation is, as the population ages, as people get into their older years, they become less likely to be in the labor force, and so there's a downward trend in labor force of about 0.25% a year. But that doesn't mean in any given year that labor force participation can't go up. There's nothing like a really hot labor market like the one we've had to bring people back in, and it did in 2023. Or people stopped dropping out. It's the same thing. The net was that labor force participation increased. Immigration also increased, that's a whole nother thing. That's just an increase in the population, and immigrants who come in, they tend to go into the labor force in about the same proportion, roughly, as people who are already here. So we wouldn't have a particular number. We're not quite back to the level of labor force participation that we were at before the pandemic. But that was.
Oh yeah, no, I'm here. I'm looking at the trades. I was what's it called? I'm in those 2 trades now, or the one. About to hit a high 4,600, but no, I'm here. I'm listening. These are good questions, and then I'm just like, I'm just silently banning people. Like y'all thought it was nice, Josh. God bless you, bro. God bless you.
We'd love to see it go up further. We actually have lower labor force participation.
Bump it up is close. ES has just hit it, so we're waiting for SPX.
Our self-image as a country, and not where we want to be. There's just a lot to do in the labor field. So another thing, if you're looking for an area of economics to study or a field to work in.
No shame wall, just straight ban. I don't play around. You know why. You guys are old. You guys are adults. I ain't here to train adults. You know what I'm saying? I love you.
Workforce is a very important area to think about studying and working on.
Well, this is wonderful. Are you getting ready to close out? All right. Well, I will let you close
4591.
Dr. Holmes, thank you for all you've done to help to pull this program together. I also want to thank Lauren for her wonderful introduction. And I'll let you close out, and I might have one word after you.
Oh, sure. Always. Well, no, I want to thank you, and thank you, Chairman Powell, for making this an enlightening and...
Hey, usually it runs when he's done talking, so that's it. Thank you.
Thank you, Chairman Powell, for coming to Spelman.
I'll wait till he
leaves. Thank you to your team for making this a successful event, and thank you for everyone in the audience also for participating and for your thought-provoking questions for those who did have questions. I want to thank the Spelman community who also helped to make this a success. So the president's team, communications.
I think it's over. So again, usually Margaret likes it when he's done speaking. We're gonna get back, but again, you should understand the theme by now. You are about to pump it up.
Everybody, this has been a fabulous morning. It has been a wonderful conversation. Thank you to you, Chairman Powell, for spending the time, giving up yourself, but most importantly for what you do for our nation and for the world. Public service takes a lot out of the person, their family.
I sold the NQ. It was a great pickup, though. Every entry was money today. Again, if you sold out early, you sold out early. But the Russell, the idea there, we're good. Closed out of the bonds, minimized the loss. So, we're chill. Thank you.
Thank you so much.
All right, there it is. There it is. So, Chad, you were very close to pump it up right now. I'm getting you up your SPX right now, so you guys keep tripping out. But here's the deal. Powell said the same speech. It had a little bit more of a bullish tilt. Again, even his little answer there about having a good inflation reaction, man, that was very, very wild. But at the end of the day here, you have a lot of bullishness. He pretty much doubled down on saying, hey, I'm not raising rates. We're just not confident on when we're cutting. So Powell isn't fighting back against that. The market liked it. It was more reassurance. And now, again, there's a reason why I went for the Russell. That has been the thing that has been moving today. So realistically, that was the play there. So for the most part, like I was saying earlier, you might just start getting now this weird melt-up mode where, again, even on the way up, it was like it wanted to come down, but not really, and then we're going to do the Dancing Queen. But we're about to hit 4,600. Again, futures are right there. My goodness, man. My goodness. So, Chattadonia, 4592. I hope you're ready for it. I hope you're ready for it. And honestly, man, usually I would tell you guys, I would try to don't do this, don't do that. But, listen, man, all I got to say is thank you to the people who were nice and respectful. And I apologize, too, If you did see anything offensive in the chat or just like really, like dark, like just bad people in the sense, like they were being really evil with some of their comments, man. So I didn't like it at all. So a lot of you got banned. There's no BBB wall. Don't even worry about it. But hopefully that would make up for anything that you guys had to deal through, because that was a good conversation. I enjoyed it. I was listening. Even I kept my mouth shut, which some of you know I usually talk a lot. So again, you had to deal with it, but somebody like you see, if you don't respond to it, I'll take care of them, and they were out there. So no worries, baby. No worries, man. No worries. You're still here. I got you, bro. I got you. Or were you just saying you're here? I thought you were talking shit. I just banned you. My bad. I'll unban you, but don't do that. You see what I'm saying? It's not, I don't know if you thought it was nice, Josh, but like I said, though, it's like, for real, man. I don't care what the topic is, man. You want to talk about drugs, you want to be racist, you want to be this, you want to be that, but like, listen, you are all adults. You know what I'm saying? So I've gave up on trying to change people's minds. I'm gonna just, do my thing, 21, and for you, do your thing, 41. I'm calling y'all 41 now. I said, some of y'all even 18, but like, do your thing, 41. You a grown man. You do your thing, man. You live how you want to live. I got you, bro. But amen. You do it, baby. I'm here to pump it up. A lot of people are, baby. Amen. Are you ready for the bond play? I closed my bond short. I didn't want it to hurt me a little bit more, but I think the bonds will come down a little bit before the rip. But just like I'm saying here, the market is feeling a certain way. They got their confirmation all day. The subtle runner all the day. This is why I went with the M2K or the Russell. Is just like M2K sound like mind control, but at the end of the day, it's like those Zazas, the Fed futures, bro. Fed futures were going, the rate cuts keep getting priced in when it's all said and done, man. Very, very wild. M2K, right? Isn't that, I'm like, doesn't that have a connotation? But that is slash M2K is a Russell Micro. No, dude, we top ticked it twice. I sold the other one. I was like, I don't want to get too high. Let me get it at a lower price. But even those baby ones, we're up like $400 on those. So I made more on that so far than the NQ. But I held the NQ for a little bit. If I held that NQ, I think I would have made $1,000 off of it. But either way, again, just the vibe of today, I think you understand it. Again, everybody already wanted to feel bullish. Again, the data, PMI, yes, it says stagflation, but in this mode, market says Goldilocks. And then Powell was nice. I'm telling you, even it was a chat with the college kids, but literally Powell, like even that one comment about entertainment and inflation report being good, you know what I'm saying? Like, it says a lot. It says a lot. So at the end of the day, we got to close out Friday, let it do its thing. I would keep watching the Russell. It's up 2.4%. That's the real winner of the day. Like, look around. They've moved up tremendously. And, like, everything else is a small day. SPY, 0.5%. NASDAQ, 0.3. Dow, 0.62. There is definitely an outlier, and it's related to this idea here with rates and the cyclicals, more or less. Not to mention those Fed futures have been getting a bid. Dish pumping, I haven't heard that one in a minute. Long term, yeah, long term's great, honestly. Even the small one, that's why I wanted to load it up here. I wanted to get it up the Schwab, but can't complain. And then the other account's looking great. Still got a lot of work to do, but I mean, it seems like we're gonna have a good end of the year here. You have a lot of things ripping, man. A lot of things ripping. It's actually insane. That's SPY hitting a new high. Russell too. Chad Antonia. It's coming, man. It's coming. That's it, man. Your 40s, you've waited so long for it. The last time we were here, we sold off 70 points. Might I add. So, again, we'll wait here for a little bit. Yeah, I didn't want to chase either, but I succumbed. I succumbed with the small ones, but that's why I was like, I started hitting the bigger ones, but I was like, you know what? Let's hold the smaller one. We'll be tentative. And we got some other things, but I'm going to play some bigger ones on a pullback. But the crackheads are out. That's it. Like, again, I didn't want to close that bond short, but I don't want to go against the crackheads. I just started, again, a lot of TLT asking questions. So we got to get it when we have our next data sets. But for now, just remember next week is going to be the non-farms. So JOLTS, jobs openings, non-farms, then we'll be good. Your 4,600 is still pending, bro. It's still pending, unfortunately. I know, didactic, bro. What the hell? I'm like, didactic, bro. You're going to have a didactic, fantastic 4,600 pump it up? Or would you like SQQ for the divvy? No, not for the divvy. No, SQQ's of all, you don't hold that. You know what I'm saying? It's going to be there for the trades, but no. There was no Guingham. I mean, the gain already happened. Again, we bottom ticked a Russell there, and then even any of the top tick looked, it kept going. So seems like there's a lot going on, but I'd wait till the next pullback on anything, or we might dance up here, and it may not go lower, but we could spend 2 hours at the highs. Excuse me, and then it breaks out. Can we see your face? Is it not on my Instagram? Have you followed me on Instagram at the Trading Fraternity? I don't know. I might have deleted it. I think, I need to post it. I haven't posted it. I had a meetup with some of the chads. I thought I posted it. I didn't. I will post it, though. You might. I don't know. Maybe. You can follow me on Instagram, dog. God bless you. I love you. But don't fall for the fakes. You're going to get followed by like 10 fake Joshes, and they'll be like, I got a secret group. And I'm like, no, man, we're only live, youtube.com/the stock market, Monday through Friday, 30 minutes before open, baby. Except for today, I woke up hella late. Not gonna lie to you, man. I woke up at like 6:12. I had the stream up by like 6:19, So that's like, but I'm the Honda. I had to wake up. I had to warm up a little bit. You know what I'm saying? I should post it now. I should. Let me find the picture, bro. I will post it now. But then I can't put like I don't have a long inspirational comment to attach to it. You know what I'm saying? People they prepare for some posts like this. You know what I'm saying? So I don't know, man. If we rush it, we gotta be careful. YTLT drop. It's still elevated. Again, first set of data gave it a huge pop. Again, I was almost at like break even in the morning. That's what was unfortunate. But again, the data, like I said, it's stagflationary, but it was like it's Goldilocks until stagflation hits, if that makes any sense, or a deeper recession. And then Powell was pretty bullish. I mean, it was the same speech, but the more he stays to the script, keeps talking. Again, it's been 60 days, almost 90 days now of rates not going up. That's giving Powell this opportunity to just keep saying the same thing, and it's leading to people saying, "Yep, he's done." And then just remember, once the Fed stops, the countdown for when they cut starts, and that he's trying to fight back against it, but he is very well letting us know he is done. Market only goes up from here. No, you have data next week. Unfortunately, everything is just a tease. But if the assumptions are correct, then yeah, we melt the F up. But at the end of the day, you got jobs, JOLTS jobs openings, non-farms, CPI, then Fed in the dot plot. That's it. That'll all be done by December 14th, 2 weeks. Like I said, all of your questions will be answered by then. And then that, people already preparing the cyclicals, all of that is going to come into play. But that is what we are waiting for now. So right now you're moving up. And like I'm saying, it's kind of a tease because you feel a certain way and you see it, but that data has to confirm it. But so if data confirms it, you're golden. If not, then you're going to get a little bit of that volatility mixed in with crackheads still trying to buy it. Gold futures climb year-to-date high 22,080 an ounce. Yeah, maybe seductive is the better word. Yeah, it is very seductive. Again, the cyclicals are already being seduced. That's why the Russell, again, that's why I said on the watch list yesterday, it's an idea. It's a great idea, and it has legs, but it only has legs once we confirm it. But people are already willing to go hand over fist now just because some of these are cheap. Just like the Fed futures, the risk to reward, is very, very low. That is dumb. Well, no, I think you're going to do this little dancing queen. Maybe we run up and hit 4,600 and then do it, but at the same time, like, you've seen these melt up days. We might have one more leg up and then it chills, or it's going to chill at 46 and then we'll spend a couple of hours and then go from there. Otherwise, it's just going to be straight up. If there's no straight up, I'm more preparing for dancing queen, but you never know. I'm still in those other plays though too. No, the Dow Jones corrected last year. Remember when Dow Jones collapsed and ran up before everybody. $2,500 ounce. I mean, I don't know. Spot gold's right now, if it's under 2,100, I'm sure if you go to eBay, like, some physical gold might be a little more expensive. Man, everything. Small long term's killing it too, though. He's, again, Ulta, don't forget. That one helped out a little bit there, but you had a lot of other things come up. And then Uber everywhere. Let's see. Uber, Meta, and Airbnb. Very good, Habibi. I'll take it. 4588. You've been here before. Again, bonds are still there. Yeah, stream alert still. Yeah. Again, you should have got that Russell stream alert right when we made it, or if you were here live, you watched us pick it up there. The little quick flips I didn't, because I didn't think I was going to hold them for that long. And even one of the Russells, I think that was like a 1 minute trade. How do you buy it? It's hard. That's what I'm saying. That's kind of the dilemma. Any play today, you feel like you're chasing. So I understand. That's why I went with the small one. But then we went up with the other ones. Oh, you should have got the Russell one. That one was at what time? An hour ago. M2K 3 Russell at 1830. And then I stream alerted the closing of the bond. So again, you could have even picked up on the vibe there. I literally bought small caps, closed my bond short, and then I started flipping other things long. So hopefully you get the general idea here. That's what's happening. Again, bonds chilling out, people liking everything else, and then they did their thing. They have 3 months to accumulate. It was October 23rd. Well, then make sure, yeah, what the hell? Why are you just telling me now? Email. Otherwise, make sure all of your stuff's up to date. But you shouldn't be that far behind, my man. Big, small decisions. Nah, small, good decisions, baby. That's why I wait a little bit. We did good on the NASDAQ would have hit nice, though. But we did capture a good amount quickly. Yeah, just holding runners, I feel. And then again, I mean, just let me ask you this, guys. You know, coming into this now, whatever the market's doing, the rally, highs, end of year, Santa Claus rally, like, does having a long-term help you with the FOMO? Because, like, at the end of the day, man, no matter what long-term, you are not missing out on anything. That is the beautiful. I think bonds have a lot of short-term potential. Again, I'm gonna go back and forth. I don't want to battle with the crackheads. I fought them all week on my bond play. I would go down 1,500, $2,000, then I go back to break even, and now you have Data and Powell. So the next time if I want to play bonds up or down, I'm gonna wait till Tuesday. Again, with Jolt's jobs opening, and then we'll go from there. But I think short-term bonds are a fun time. It's a penny stock. Literally, that's what Steve Leisman said, but I agree. Like, if you want real vol, like half of the day today, bonds move more than anything. So I'm making my Russell plays, the bonds were moving way, way more. So it's like, if you want that back and forth, bonds are great. If you want to make up your mind and say they're cutting and doing this, that's where you're going to run into danger. But I think short-term up and down on bonds are definitely a great opportunity. Like I learned on the watch list, babe. Next 2 weeks are him. Tell him, Douglas. See, Douglas is a young guy. That's why you got hope, Douglas. I'm here for you, man. You know what I'm saying? I'm giving up on the old guys. And old guys ain't have to do with age. It's a mentality. Oh, stop playing with me, baby. God bless you. Tomorrow's your birthday? No way, bro. Happy birthday. Let's go. Are you kidding? I know we have another birthday tomorrow. Is it Creston? I think he got his birthday tomorrow too, man. And we have birthday today, man. So let's go. Happy birthday, y'all. It's December. Overall, the LT averaging. Well, here's the thing I'll tell you. Your LT, like I'm saying, it's great that it's been adequate. You got a slight, gain, and then after dividends, you're up, and then the small account is doing a lot better. But just take note, if I don't believe it, you know what I'm saying? But if all of this good shit comes true, your softest of landing, you haven't seen shit on your long term yet. Why? Because, again, think cyclical. All of your good value is going to hold up. It did hold up. But all the dog shit now is going to come back up, and then you're going to be able to see a whole new world. Walmart says it isn't advertising on X. Oh, shit now. Now we can't go to Walmart? That one's tough, bro, because now Target or Walmart, now what are you going to do? Fuck. Ah, shit, Chad. Oh, Walmart with the wedge issue. Oh, man. MPW, yeah, that's them. Even Snapchat, we're back up on Snapchat. Your Airbnb, Uber already led the way. So, you got a lot. Time to go to Costco. Costco is the only one, I think. Is Costco safe? All right. Google Gas. Surprised Walmart getting involved. Hey man, Walmart, they doing their thing. Costco. Where's even Tesla, bro? Nobody liked the Cybertruck. What did somebody ask me? They're like, are you still gonna get it after the disappointing specs? I'm like, what the hell was disappointing? I just saw it beat a Porsche while towing a Porsche. Again, I am not buying this truck to haul anything. I am just a very vain person and want a cool car. Like, you know what I'm saying? But, like, I don't know what you saw, but what I saw was dope, bro. You know what I'm saying? I'm sold on it. And, I'm not, like, sometimes I'm pretty sheepish, I guess. But at the end of the time, that is a truck for, like, being ugly and cool at the same time. If that doesn't vibe with my personality, I'm going to drive it a couple of times. You know why? Because it's electric. I can't drive it for work. I can't do it. So guess what? I'm going to take it to get coffee. I don't even drink coffee. I'm going to just go get I'm going to get the non-coffee coffee, and then I'm going to drive it somewhere, and then maybe I'll floor it, and then it runs out of battery, and then I'll tow it home or something. But I don't care. But it's a cool car. It won. It gets the W in my book. Tommy gun, bro. That's stupid. I got that whole little friend. They're like, oh, man, good thing the attacker didn't shoot your windows. And why are they attacking you with a Tommy gun? You know what I'm saying? Like, see, I've seen so many TikTok clips. I ain't seen nobody ever pull out a Tommy gun. Ever. Like, even if you pulled out, like, a Tommy gun in a rap video trying to even flex, I'd be like, nah, that's not it, man. Like, you don't see, like, that's like, come on. And he was like, and then we tested it against a musket. No, like, come on, man. Oh, what happened to our boy? Bior. That thing's down. We're down $10 or 10 cents a share. $90. It's a cool gun, but like, I don't know, man. Like in Call of Duty Modern Warfare, or Call of Duty 2, World at War, that was a really cool gun. But again, I don't know if he was trying to show the practicality of bulletproof. I ain't never seen nobody test anything against the Tommy gun. It is 45 caliber, but still, I mean, I guess it's weird, man. I guess maybe I'm that's just too boomer for me. I guess maybe Elon, he flexing on us, man. He flexing on us with the Tommy gun. The guy throwing the ball at the window, that looked like a scene from Roblox. I'm telling you, the way he threw it, the power level, the animation, he looked like a Roblox character. I was so offended by that. I was like, that's not a real baseball test at all. Like, it literally felt like Roblox. All right, man, another new high. I don't know. We might have ran out of double dip opportunities, so now you're really going to have to chase. But ride that M2K. That's it. You could ride that M2K for a little bit if you really wanted to. So that one's doing good. And then the Zaza keep going up, man. That's it, Chad. Y'all ready for this, man? 45.94. Oh, my God. Are you getting nervous? Oh, man. Legit question. Help you understand moral compass. I hate tobacco. How do I justify buying in an MO? I don't think you're worried about it, to be honest. That's it. Take that to God. Don't take it to me, not in a public chat room with 5,000 people. In my mind, I view that as an attempt to it's virtue signaling. You make up your decision. You either separate your finances from not, and you decide your beliefs on the world or not, but it's not. And I don't mean to disrespect you. I hope you don't take it like that, because I've talked about this a lot, and it turns into this conversation, you know what I'm saying? But it's like the moment you start talking about morality in like a public sense with your investments, it's borderline flexing something or causing anything. So you're curious how I separate it. You were saying for you, not how for me. So like you already know, I've talked about this many times, but I just really don't, and that's why I'm, as an example, I don't even talk about it. Why talk about it where that's between you and God, what you believe, what you feel, the world itself. But at the very least, anytime I see it talked about though, it just comes off so disingenuous that I've been like, just make up your mind and do what you got to do. If you feel like it's wrong, don't do it. If you feel like it's right, do it. And that's that. But our morality will boil down to a lot of things, and not just one moment too, might I add. Disingenuous, new word. Is that a new word? Did I make it up? I think it's a real word, but yeah. I didn't know where to throw in didactic, but give me some time. I'll work on it. Words are good, man. Didactic. Gold, because there were no more rate cuts. That's it. Gold, again, we've talked about this many times, but gold it's getting what it needs. Gold is actually the setup, just like the cyclicals, right? Gold is setting up very beautifully. Not to mention economic worry, slowdown of economy, dollar coming down, but now no more rate hikes. You got people, it's set up and at all-time highs. Gold is in pole position now, but the timing of it is the real blowout is going to be at when we cut rates, but everything is favorable for gold right now. Even without the crackheads is what I'm saying. That's the ironic part, is like, it's not like people are buying. More crackheads are into bonds than gold right now. It's all boomers in gold, but gold has a very good fundamental setup now that, again, if the longer rates stay halted and they don't go up and then the dollar keeps coming down and then the next step is cut, all of that is great for young gold. Balance the gold eagle on your fingertip and tap it with another coin. It'll ring for 20 to 30 seconds. Are you for real? Or that sounded cool, but like, is that real? Because I kind of want to try it. Who are the crackheads? Crackheads are just everybody, kind of taking the assumption and saying that it's fact. Saying that, yep, Powell has to cut now and he's going to do this, and all the data is no matter what coming down, you know, full Goldilocks is what I would say, crackhead. But because again, the idea is there. Again, the whole, we talked about it yesterday, today, all day. You know, the idea has legs, but you are waiting for a certain level of confirmation. Everybody going ahead is front running it, which makes sense. I mean, we front run in a lot of other ways. Oh, he's sorry, you weren't so saying, no, man, you good, but dog, trust me, man, you've been here for a while. You know I love you, man. I just, for conversation's sake, this is something that I encourage you all to develop individually and personally, to make this decision yourself and understand what it is. You know, you've seen me for years. You know what I believe. You know what I do, and I do believe in a separation. But at the same time, though, all of it loses its effort when you talk about it publicly. That's it. I don't tell you guys what I donate. I don't tell you the Chads that I've helped out and done certain things. Like, you know why? Don't let your right hand know what your left hand is doing. Otherwise, it loses all of its benefit. So even then, even if you do not invest for a moral reason and you tell people about it, what are you hoping to gain out of it? Was it just, and then vice versa. So that's how I look at it. Don't let your left know what your right hand is doing. You got to have your separation and do it. Whatever you do it for a real reason. You know what I'm saying? Do it genuinely and do it across the board, and make sure it is what you genuinely feel. You know, we all have our limits and we all have our beliefs. Some of us have no limits, but that's what they say. You know, what defines somebody in morality, a lot of time, it's not necessarily what they do, but what they aren't willing to do. You know, everybody has a limit, or maybe some people call that being classy at the same time too. There is a limit to where you will go down to or stoop to. So, but that is all you. And like I'm saying, I don't want to put you guys in a position where you see it, man. Chads, not everybody is a real Chad. You know, everybody want to fight in this, and you're going to get the world giving you 1,000 unsolicited ideas just when you say it. So it's even in your best interest to keep that conversation personal to yourself, because you're not going to really find, you're going to just get confused at the end of it with everybody, and everybody saying this, that, devil's advocate, going up this random point, and before you know it, you're going to be more confused than you were to start with. So, that's why I say it's between you and God, and really think about it and think what you believe in life and make that decision, and that's it. It's on you, man.
All right, time to go to work.
It's green. NASDAQ's green. That one would have been killer.
Didactic.
Feels good. Mark is loving it, man. Zelensky says changes are needed in system of mobilization. SoFi squeeze.